Front and centre. The opening trade is almost upon us. We are expecting a positive start to the day. The tech sector absolutely front and centre once again after yesterday's big sell-off. Here we go. Here is the opening trade. Let's talk about the numbers that we see on the screen in front of us. The FTSE 100 and the gate positive. Keep an eye on the Swiss market as well, given what we're seeing out of Novartis this morning and what the impact is going to be, because yesterday the story was about Roche. We'll talk about that story again with Sam Fazeli in just a moment. But here we go. Stock 600 up 0.2%. FTSE 100 outperforming as Critty suggested. You've got the DAX up by 0.2%. The IBEX is up by 0.3% as well. Be interesting to see what the Swiss market looks like. Critty, break it down from a sector point of view. Where is the sector story this morning, given the legacy of yesterday's session, particularly in the United States?
Well, the heavyweights are carrying the index higher. It is all about LVMH, Novo Nordisk, ASML, for example, as well. The opening trades here higher for ASML, given that we were seeing a lot of that tech read-through. So that's going to be crucial in terms of the green on the screen. To the downside, though, we are going to be seeing some individual movers, and we'll dive into the stories here. EQT, of course, the massive PE fund out of Stockholm, out of Sweden, well, Stockholm and Sweden, is one of your biggest weights to the downside, as is Siemens as well. So that's going to be one to keep an eye on, as well as Nokia. So those are your big movers to the downside. But when it comes to what is lifting this market, it is quite literally a tale of, I want to say the Magnificent Seven, but the Sensational Six, to be a Guy Johnson about it.
Yeah, maybe. Yeah, just keeping an eye on some of them are yet to open. There we have Novartis now opening down by 2.7%. Still haven't got Publicis. That's trading halted, apparently. Volvo Cars up 6.7%, so we do see some positivity there. And Volvo Trucks up by 1%. Confusingly, both reporting on the same day, but we're keeping them separate. This is the picture then across the stocks Europe 50, with Roche doing pretty well. And at the bottom, yeah, Schneider Electric, one of your sensational six then, Guy.
Under a little bit of pressure this morning. Yeah, it's interesting to see how the mix is kind of shaking out this morning. I'm fascinated to see Novartis down as much as it is this morning. Down by over, that's quite a significant move down for a very big heavyweight stock, and interesting to see Roche on the upside. Anyway, we'll get the story on that one from Sam Fazeli in just a few moments' time. So that's how the stock story is breaking out this morning. We're kind of dealing with a little bit of yesterday's legacy. We're folding in some earnings news. We're looking forward to the ECB a little bit later on as well, and talking about some of the politics in this mix as well. Let's talk a little bit more about what is happening with the ECB. I want to come back to the bond market story as well, which I think is fascinating too. Let's go to Frankfurt. Let's talk to Lizzie Burden. She's there at the ECB ahead of what is expected to be something of a non-meeting, but I am really interested to hear the tone from Christine Lagarde a little bit later on. How cautious is she going to be, Lizzie, do you think?
You're absolutely right, Guy, because that June cut was well telegraphed, over-telegraphed perhaps, to the point that the ECB was boxed into it almost. So that's not the communication style Christine Lagarde is going to want to repeat this time. It is, as you say, all eyes on September, because by then they'll have more data on inflation and wages. They'll have a clearer idea of what the Federal Reserve is doing and how the French politics shakes out. Of course, that's Christine Lagarde's homeland. I'm sure that there'll be a question about French politics in the press conference. And you've had lots of policymakers on the Governing Council as well saying that they'd rather make a decision when they have the quarterly forecasts. So this is what every single economist in our survey expected, a September cut. But when it comes to the communications, it is a difficult balancing act. impact. I think that she's not going to want to undermine market expectations for 1 or 2 more cuts this year, but she isn't going to want to be too committal to that September cut. Therefore, I think she's going to rely on the language of data dependence yet again. But the question I think will be interesting is whether they reintroduce the easing bias in the guidance.
All right, Bloomberg's UK correspondent and European correspondent looked at economics around the world for us. Lizzie Burden, we thank you so much for walking us through that story. Let's get a little bit more insight here. Ian Steely, International CIO for Fixed Income over at JP Morgan Asset Management, joins us this morning around the table. Welcome to our new desk. I think this is the first time we've had you on the show since then. Walk us through your take on the ECB. Does this meeting move the dial in terms of what we've already seen priced in?
I'd probably agree with pretty much everything Lizzie had to say. So no, I don't think it does. I think if you're Christine Lagarde today, you're going to want to come out of this meeting with effectively no feathers ruffled, because Lizzie's right. They preempted the cut earlier this year. In hindsight, they probably might not have done that, had they had all the data in front of them and not told the market that it was actually going to happen. So they want to keep themselves open for September. I do think they will be looking at the data and thinking, yes, September looks like a realistic time for us to cut again. But we've got a couple of months in between, and we know what happened in the beginning of the year. Over the space of a couple of months, it can change things.
We'll come back to the policy in a second. Do we need to be paying attention to the turmoil or lack thereof of what's going on in France now, or is that kind of last week's story?
I feel from the market standpoint it's last week's story. I think there's going to be continual rumblings, but we'll continue to get data. But ultimately it's going to be now inflation, it's going to be the PMIs, it's going to be what the growth outlook looks like. And I think actually the ECB is going to be very much focused on what's happening the other side of the Atlantic with the Federal Reserve and what they're doing as well. So combination of that, let's effectively get this meeting out the way, hopefully not create any real headlines, any real news, and then take a few weeks off for the summer. Let's come back in September.
Let me pivot to the UK market then, Ian. We had the labour market data out this morning. It was all in line with expectation. But that does mean that we've got wages still running at what would be historically an elevated level, and inflation is back down to target. We saw elements of that inflation story, though, are sticky. Where does that all leave us? I see that yields are down a touch this morning, the UK certainly at the 10-year. How do you approach gilts at this point?
So actually, we're pretty constructive on gilts at the moment, and I think if you look through the data and try to figure out what the Bank of England are focusing on, I do think they're still on for easing policy in August. And I know we had the inflation that was a little bit stickier yesterday, and I hate to say it, there does seem to be a bit of a Taylor Swift effect in there. Hotels did contribute to that. But when we look at the wage data today, it's trending down, and actually we've got the national living wage numbers out the way, and the actual month-over-month numbers, I know they're volatile. That was 0.27. That's low. So I think the Bank of England are going to be set up. I know Hugh Pill maybe doesn't quite agree with me on that, but won't be the first time the Bank of England have disagreed with the chief economist. So I think at the moment, again, let's keep an eye on the data. But it feels to me that the Bank of England do want to get moving. We're
going to need a new data set, aren't we? It's going to be how economies performed ex-Swift. This is going to have to be the new way of looking at things, perhaps.
Guy, are you making that? Are you making that index? Are you on it?
Right after the show.
Don't worry.
Yeah, absolutely. Let's go his name all over it. So that's interesting then. So you do think that the Bank of England cuts in August, despite some of that stickiness. Does growth justify the cut, or does growth actually not matter that much, given this is going to be a response to progress made on inflation?
Yeah, and I think that's the case for a number of central banks around the world. It's more preemptive cuts. It's central banks that believe they've taken policy into a very restrictive territory. They're forward-looking. I think they still believe monetary policy works with lags. Maybe these lags are a lot longer than previous cycles and a lot longer than a lot of people thought. But I think they want to just start the moving. And I think the idea would be that if you do these preemptive cuts and you're doing sort of 25 basis points maybe on a quarterly basis, then hopefully you allow this expansion to continue, and then you don't have to effectively panic, react and start doing big cuts later on, because actually growth is starting to slow. And I think that's what we'll be focusing. What it does mean, though, is that it means rates at the moment aren't going back to zero or anything like that. They're just trying to ease, sort of taking their foot off the brake, shall we say, on monetary policy.
So keep calm and cut rates is
exactly.
the mantra in the UK.
If they go in August, do they go in November?
Yes, I think they do. I think they continue to go on a sort of a quarterly basis, as in line with when the forecasts come out. I think that would make sense.
So we get 2 cuts this year?
I think so. And the market's pricing that, so I don't think it's a surprise.
But isn't the risk that if we don't go therefore the risk is that actually we don't go in August, we get to September, we've probably only got the chance to do one, and therefore the market probably is a little rich right now.
Possibly, but I don't like people fixating on the end of the year.
Okay.
I much prefer to look at what's happening over the next 6 to 12 months, because I don't think it makes a huge amount of difference if they're going in November or they're going at the very beginning of 25. So for me, it's what do we expect to be happening over the next, call it 12 months or so. And I think the Bank of England will be looking to do a preemptive cutting cycle that is allowing just to take the edge off monetary policy.
Do Treasuries outperform European government bonds because the Fed actually feels like it's moving in? We feel like we maybe got a little bit more clarity, weirdly, around the Fed than we do maybe around the ECB.
Yeah, that's a very interesting question. And actually, I would maybe argue the other way on that. We've had a huge outperformance of Treasuries over the last few months. For all the chat and chatter in the markets around politics and the election in the US, the Treasury market has definitely been focusing on the data and the fact that we're seeing a bit of a softening. And then if we do get some form of political noise around the fiscal side, possibly around tariffs, I think you could argue that they're not necessarily Treasury negative, but they're probably more positive for European bonds, particularly on the tariff side, because I think the main view is that will have a bigger impact on growth in the rest of the world. And Europe's obviously a huge trading nation, a huge exporting nation, globalization very important to Europe. I think they will be more impacted than the US would be.
All fair points. The fiscal spend, though, seems to be what's keeping a lot of this resilience on both sides of the Atlantic alive and well. You could argue that in the States. You could argue that specifically, at least in the periphery of Europe as well. In the fallout of some of the kind of deficit concerns we were talking about, again, with the U.S., but also more specifically and more recently with France and arguably with the U.K. as well, we've had guest over guest come on the show and say, Spain, Italy, those credits look better than France at the moment. But the bond market isn't showing evidence of that. No one seems to be trading that way or pricing that in. Why not?
But I would say the bond market has shown that, because we saw the big sell-off in Italy on the back of the France news. We went up to about 155, 160 basis points. It's come right back down. France is still a good 15, 20 basis points above the lows of the year. So I think the market has differentiated to some extent between France and then the rest of the periphery. And I would agree with those comments. It does feel to us, at least, that Spain and Italy would be better credits for us at the moment. Those
are better credits. I just wanted to flag that we've got the first, I think, the first OAT issuance today since the election was called. How do you think the market is going to be positioned to absorb that? I mean, we've seen volatility and a bit more stability return, but at an elevated spread on French bonds. Where do we stand?
I think it's going to be a good test. I actually think it should go absolutely fine. I mean, I do think that the kind of French headline news has gone out of the way, and we're much more focused on everything else that's going on at the moment.
Ian, nice to see you. Thanks for stopping by, joining us around the table. Great to see you. Ian Steely, International CIO for Fixed Income at JP Morgan Asset Management. Look for an August cut from the Bank of England. Okay, let's talk about what's happening in the stock story. Let's go to the core of what is going on here in Europe. The core 6 looks something like this. Schneider's weak. ASML, a little weak. Obviously, the chip story was yesterday. We continue to kind of factor some of that into our thinking this morning. As Anna's been pointing out throughout the morning, though, the AI trade absolutely front and centre, and in some ways, Schneider definitely part of that. Interesting to see Novo bouncing today. In fact, the drug sector broadly is higher today, with the exception of Novartis. Let's get some more individual stock stories. Joe Easton's here with the details.
So we got some decent moves in the corporate update stocks this morning, all the ones reporting earnings. Now, the one standing out, Novartis, this stock actually ticking lower, was down around 3%. Now, some analysts are actually pointing to how some of the legacy sales, some of the legacy products weren't actually as strong as expected. And it's worth noting that stock has risen around 20% since an April low, so potentially just a bit of profit taken on that one. Volvo Cars seems to be the profit number, making up for worries around EV tariffs. And Nokia, once again, absolutely slammed on concern around a slowdown in 5G infrastructure spending today. ABB in Switzerland also having a rough start to trading, a bit of a slowdown in their automated warehouses, their robotics, that kind of business is hitting them today. We'll flip over, lots more earnings coming through and some other decent moves to bring you on the next screen. If that does come up, there it goes. And we've got Publicis at the top here, up 8%. Now, this stock has been down a lot on concern around a slowdown in ad spending from the tech industry, but a bit of recovery in there. Randstad in recruitment, down very slightly. They have warned once again, like Page Group, they said they have seen a slowdown in some of their fee earnings, but potentially priced in. Frasers Group, I didn't expect that to be as much as that, up 10%. They are saying that they're benefiting from the summer of sport, the Euros, which we don't need any reminding about given the result, but they are doing well, selling a lot of shirts there. And also finally down the bottom here, we got EQT. You mentioned this one earlier. That's over in private equity investing, a bit of weakness in some of their M&A business at the moment for that one. Lots going on in the earnings boards at the moment. We'll check in on the chip stocks though. That massive drop yesterday in ASML, down at more than 10%, actually not getting a rebound. I expected to see a bit of a boost there. BE Semi bouncing a little bit, and Infineon, ST Micro coming lower again. TSMC earnings probably not doing enough for that sector. The chip sector was down the most in 2.5 years in Europe yesterday, not really getting too much of a recovery. Finally, one morning call to bring you, and it's in the UK. Schroders gets a new overweight and a massive jump for that one. This is over at Morgan Stanley. They're citing more flows into UK equity funds is the reason they're upgrading this stock. Very interesting for those following UK capital markets. Overweight MS and Schroders up 5.6%.
Thanks very much, Joe. Joe Easton from our equities team joining us there with a look at some of the movers. And there are a number of, there's a lot going on in terms of stock stories this morning, and some quite sizable reactions to earnings, aren't there? I mean, I'm looking at some of the sell-off that we've seen around ABB, and there were some positives there. We got a record margin from that business, but that's not enough in this sort of tough environment. It takes more, it would seem, to delight investors. Upgrades and downgrades to guidance, they seem to be, as always, to the fore.
You pointed this out earlier, though, Anna. Energy companies, in terms of the points gains, that's where the gains are coming from this morning. So energy is on the upside, and that is maybe partly behind what we're seeing out of the FTSE 100 today. And the rest of the market feels quite defensive. So Shell, Total and BP are all up. Nestle's up, Unilever's up. The luxury stocks come roaring back. But as you say, it's the earnings numbers and a bit of tech in the mix on the downside. ABB, ASML, Schneider's down. So the AI trade's quite mixed today and quite nuanced. You've got the Publicis story, but then you've got the legacy effect maybe still coming through from ASML and what we saw in the chip sector more broadly.
Yeah, I think the regional perspective is interesting because this is a really strong rally to the upside this morning. And we were kind of set that up that way from the get-go from futures. But the fact that we are seeing the likes of course, the members of the Swiss market that you mentioned, but also the Swedish market really taking a hit. I'm just looking at, we mentioned EQT earlier as well, but Ericsson taking a pretty big hit this morning as well, down about 1.4%, and one of your biggest weights to the downside. So it's interesting that those are the two markets that are underperforming this broad rally you're seeing everywhere else.
But the question we asked first thing, do you buy the dip? Doesn't feel a convincing dip buying session thus far. Feels like maybe a broadening session.
Like an autopilot, maybe?
No, we're buying other things. We're bouncing back a little bit, maybe from the sell-off we saw in luxury a few days back. That was a story yesterday, and it's a story again today. But this doesn't feel massively convincing. But you are seeing some of the more defensive names coming to the fore, and you are seeing, to Anna's point, maybe some of those energy stocks coming to the fore as well.
Yes.
That feels defensive to me.
Yes, and maybe that's another leg of the rotation.
Yep, exactly.
And we're back to things that Europe does well at, and that takes us in that kind of direction. Obviously, often we can find the most interesting themes in earnings stories, and then all it takes is to say that the oil price is up by 0.8%. And actually, that's the thing you needed to know about the European session. Coming up on the programme, we'll delve deeper into the pharma sector. Novartis raises profit guidance again as sales climb for its blockbuster psoriasis and heart failure treatments. More on this and the health sector. That's coming up. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the opening trade, 20 minutes into our European trading day, and we have European equity markets moving a little higher this morning, less so for the German market, it would seem, digesting a lot of earnings stories. The London market outperforming, up by just shy of 1%, and commodity prices in the mix as well. We are paying attention to what's happening in Strasbourg today. We're going to see a vote on Ursula von der Leyen. She is up for European Commission President once again, of course, and so we're focused on that. She is speaking at the moment, and we know some of the things that she's going to be talking about today. Recommitting to the EU's climate ambitions, trying to court the Greens on that particular front, whilst at the same time talking about strengthening defence industries. So there's those competing investment themes, I suppose you could call them, or competing demands for the European time that we are keeping in focus. Let me also mention that we're live in Oxfordshire in the UK at Blenheim Palace, where that European gathering of leaders is taking place. So this is broader than the EU, of course. It includes the UK and many more. So tens of leaders gathering at Blenheim Palace. We're seeing some of them arrive right now, and some of them, and a lot of focus will be on the UK's relationship with Europe. We see Keir Starmer there, I am told. The back of Keir Starmer disappearing into Blenheim Palace. That was well identified by whoever managed to point that out. Yes, does look like him there on the right. Guy, back to corporates.
We'll get used to his gait and his kind of. We'll get more used to kind of the profile of Keir Starmer, I suspect, over the next 5 years. I want to talk about what's happening in the pharma sector, because there's some really fascinating stories going on right now. We'll take you back to the Roche story and what happened yesterday with Novo and Lilly in just a moment. But let's kick things off and talk a little bit about what's happening with Novartis. The shares are lower this morning. This after the drug maker reported second quarter earnings that beat. It raised its guidance. This is a bit of a surprise to me. I'm trying to figure out why a stock of this scale is down by 2.24% on the back of this. There is but one person to ask and to try and get the answer to that question. He's called Sam Fazeli. He's sitting next to me from Bloomberg Intelligence. Can you help me?
I wish I could. No. I mean, look, the numbers aren't the reason, pretty clearly, because they beat very handsomely on operating profit, about 7%.
Yep.
Sales were, 1% better? Clearly, they're doing a great job of cost management.
Yep.
Most of the drugs did really well, maybe one or two little hiccups in terms of comparison to consensus. So why is it, and at the mid-year, it's looking like it's going to go towards a 20% operating profit rise this year, and consensus at 15. So what's there not to like? I can only imagine that maybe some people were expecting even more, or maybe they expected that the guidance would be more than where we are.
Yep.
It's also possible that one of their key drugs, called Pluvicto for prostate cancer, has been slower than expected. It's one of the growth drivers. Cosentyx will eventually slow down over time, which is their biggest drug. So it's possible that people have taken a little bit of negative view of that.
Right. Well, also, as you mentioned there, some of the analysts I'm reading this morning, this just in on the Bloomberg terminal, citing the fact that another guidance raise was expected. That's a tough reputation to have for a business, isn't it? That you're just expecting these companies to keep raising guidance.
Right, but they gave it. They brought it. I mean, already the 15% growth that analysts were expecting was above what the previous guidance was. But what they've given now is better than that. I mean, it's just how much more could a company do? I mean, 20% operating profit growth in 1 year for a company this size is pretty respectable.
Can we talk about some of the other moves in the last 24 hours as well, outside of Novartis? This is coming from, I believe, Roche announced yesterday of an early stage trial for those obesity drugs, getting in on the obesity gains. Novo Nordisk, Eli Lilly, of course, taking a pretty big hit off the back of it. Does that sustain? Does Roche get to that level?
I mean, look, I'm not used to a world where a large pharma company of that size, of that ilk, puts out a phase 1 trial data, and it's not even full data, and gets a share price reaction like this. So in the world of obesity, and you get the reaction in Lilly and Novo, I think there's a lot of hot money that comes in various directions. And I suspect what you've seen is some of that either going into Roche and then coming out of Novo Lilly. Honestly, this is a huge market that we all know about. There's going to be lots of opportunity for lots of players. This drug is unlikely to be on the market before 28, 29, by which time Novo and Lilly and others would have had new drugs come along. It's a good move, but the share price move does make you look a little bit, did drop my jaw a little bit, especially given the size of Roche.
How early stage are we talking about?
Phase 1.
How much information do we actually have? How big a trial are we talking about? This is a $22 billion company that has moved nearly 7% over the last 2 days.
Phase 1. Phase 1 means there's a phase 2, then there's a phase 3, and these are large phase 3s, right? But if we start, there's usually a phase 4 too in terms of looking back. But that's another 4 or 5 years. But I think it's all to do with the hotness of the obesity story.
Are we going to see more companies doing this?
Having data, so we have
putting out phase 1 data, expecting a pop, getting the algos to trade it, getting the markets excited.
Is this the healthcare version of AI? That's
well, exactly.
Right.
Obesity is definitely the healthcare version of AI, and it's a real market, just like AI is a real market, right? You can't talk to a company and they tell you, no, we're not doing anything in AI. It just doesn't exist. So I think we're going to get a very interesting data set from Amgen this year. On a competitive product, there would be a once monthly injection. You might not even need an oral drug once a day, right? Of course, all of these have a room to play, but it just shows how hot the space is. Meaning, money coming in and going out, fast money.
Okay, that's interesting. So there might be room for different types of medication in this field. Sam, thanks very much. Sam Fazeli from Bloomberg Intelligence. We'll come back. We'll talk investment themes with investment solutions at City Wealth. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people. It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal. to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. The markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
I believe the current data are consistent with achieving a soft landing. And I'll be looking for data over the next couple of months to buttress that view. So while I don't believe we've reached our final destination, I do believe we are getting closer to the time when a cut in the policy rate is warranted.
Are we there yet? Chris Waller being over his shoulder. Not quite, kids. We're nearly there. We're not quite there yet, but we're getting there. We'll be there fairly shortly. The Fed feels like it's moving in the direction of rate cuts. The market is pricing in September as an increasing probability, a certainty almost, judging by the data that we are seeing at the moment. Is that the theme that is dominating, though? It wasn't yesterday. Yesterday was about the big tech sell-off. We've been waiting for it at some point. This is a place, remember, where so many people have been hiding out, parking their money, and generating decent returns. That's where the outperformance has come from. Does that start to turn as the market broadens out a little bit? Christian Bittley, Head of Investment Solutions at Citi Wealth, sitting next to us around the table this morning. Nice to see you in Europe.
No, great to be here. Thanks
You've been all over the place. You've been in Asia, you're here in Europe, you've been to Latin America, you've got a pretty good view of what's happening in the States. Let's start with tech.
Okay.
If I wanted to outperform this year, if I want my portfolio to do well, I've had to have put some money in that space. Is that phase coming to an end?
I mean, look, you had the first half of the year, you basically have tech delivering, close to 68% of the earnings when you look at those mega cap companies. So our view was always, you need to have exposure to those companies. They're the ones that have the large free cash flow generation. They're the ones that really are driving a lot of the advancements and benefits when it comes to areas like Gen AI. But our view has always been, you need to broaden that out.
Yep.
So that idea, when you're looking at this rotation into like the S&P 500 equal weight, that's very sensible because the earnings story this year is actually one where it's not going to be dominated just by those names. We expect that in Q2, we're going to see 10 out of 11 sectors pivoting to earnings growth, when in Q4 of last year, that was 7 out of 11 sectors that were in earnings recession.
So the first half of the year I bought the S&P, the second half of the year I buy the equal weight.
I think you do equal weight. And I think what's interesting is the action that we're seeing in semis and tech, I think that has more to do with politics in the U.S. right now than anything that's happening from more of a macro perspective within markets.
I'm going to follow up on that one.
We thought you might. That's why.
That's why we both looked at you.
I can't wait for it.
So the chip sector has been really wonky from kind of an options perspective, but it feels like it's only been rallying fundamentally because it is working as a defense company is. That every time a government contract is awarded, how much of that is dare I say, a little bit of a Trump trade or a possibility of that? If we're talking about the repeal of manufacturing jobs in the States, or at least bringing back down to earth, or some of the IRA chip action coming to those chip companies, how much of the chip reversal is a Trump story?
So I think just the initial market reaction to it, I think when we look at politics, it's really going to be policy that drives the longer term story here. It's not political rhetoric. And so that headline around tariffs, when we look at the fact that, Taiwan produces 80% of the advanced chips, these are important stories within the supply chain. But another theme that has dominated this year is this idea of economic security and what does that mean? And access to chips, like when you think of the necessity to have that full value chain, that is a degree of economic security. So that's given a lot of nations thoughts around making sure that they have access to the extensity of that, which I think will continue to play out.
So what do we classify? I'm going to be very kind of simplistic about this. What do we classify the chips trade as? A bid for chips at? It used to be an inflationary hedge. It was a 2021 play on inflation. Then it became a geopolitical one, to your point. It kind of feels like it's becoming a domestic political one now. But then there's the AI trade that kind of gets roped into
There's
that
the Gen
as well.
AI, which is obviously a select companies. There's the equipment makers that were obviously very hit yesterday.
So when you see a pullback like that, what are we attributing that to? Is that just options market?
I think it's taking gains too. I mean, when you put the pullback into context, it's like you have a headline like tariffs. You have a headline like when you look at the probability of a Trump presidency, what does that mean? And then you look at the fact that a lot of these companies are up 10, 20, 50+%, giving back some of those gains, taking a breather in earnings season, waiting to see are they going to beat and raise, which has been a pretty consistent story this year. I think that's what it is.
So you are seeing this rotation away from tech into other sectors, and you mentioned the expectations around earnings and how it's going to be broader, and so you buy the equal weight, as you were suggesting. We were all reading a note from Goldman Sachs yesterday that was saying they're not buying the dip because of seasonality. They're concerned about what happens in July and August. That might be a little too near term for wealth clients. But I wonder, is that something that you're thinking about? Is there vulnerability and volatility in the short term?
I think there's certainly volatility in the short term when you have everything from the election uncertainty. That's something that when you go into, particularly within the U.S. market, you tend to see the spikes in volatility happen within September, within October. I think the other thing, though, that is becoming more certain, or it looks like it's going to be more certain, is rate cuts on the table. And so we started this year actually thinking we were going to get 3 rate cuts, and we held to that. Even with the volatility that we saw, it was 7 rate cuts priced into the market, then down to close to 0. And so I think you have more, what the market doesn't like is uncertainty. So the idea that we could actually begin on that rate cut cycle starting in September would actually be then a net positive.
I noticed in your notes as well, Kristen, you were talking about M&A, in particular in certain sectors. Healthcare, I think, is one of them. I was also reading a piece by one of our colleagues in Opinion talking about how PE deals might be coming back after a couple of years of that area being pretty quiet. Is that a theme that you're investing around, the broad M&A story? We hear it a little bit from investment banks as well.
Yes, absolutely. So when you look at, and particularly within healthcare, so healthcare has been a very unloved sector, as you know, other than the 2 major names that are involved in GLP-1 drugs. But when you look at broader healthcare, whether it's biotech, life sciences, medical equipment, these are areas that we've liked, even though the earnings necessarily haven't been there. But when we look at different catalysts, there's certainly long-term catalysts in terms of demographics, investing in longevity. But as we see that rate story become more certain in terms of rates coming down, then you ultimately have the benefit of M&A activity would pick up. And you have those big pharma companies that naturally, what do they have to do? They have to build their pipelines. And so that's something that it will be rates driven, but you could see those markets open up.
Does diversification mean Europe? Or do we stay away from Europe? If we're looking at pharma, do we go to Europe? Do we stay in the United States? How do I do this from a geopolitical point of view? Sorry, geographical point of view? Europe's got plenty of chaos of its own as well on the politics front that it needs to deal with too. How are you thinking about where geographically you want to be putting your money?
So I think geographic diversification is important for a number of different reasons, but I think you have to be careful. So when we talk about investing in Europe, investing in the UK, we are looking at, it's more of a stock selection story and companies that are tied to these long-term unstoppable trends. So where you see these multinational companies, whether they're involved in healthcare and pharma, whether they're involved in actually some of the rise of AI and digitization, there are opportunities not just within this region, but also in Asia more broadly. But it's not just buying the index. So I think the key is it's not just passive exposure. You have to be very thoughtful in terms of the themes where you see the valuation benefit as well as the valuations.
So speaking of the themes, one of the themes that we've been hearing, I think for the past 5, arguably 8 years, is nearshoring. And I think a lot of people kind of roll their eyes when they hear that term. But I'm curious how much of this shows up in the market. And the reason I asked this, I had a really interesting conversation yesterday with in the private markets with one of the top tier kind of banks who operates in that space, talking about the fact they're just now seeing evidence of that CapEx spend, and they're seeing it in the private market. So I've heard Spanish banks, for example, talk about CapEx spend in Mexico, et cetera. Does this theme set up S&P 500 companies, Stock 600 companies for a big CapEx expenditure that's about to hit their balance sheets to address nearshoring, whether it's in response to Trump, whether it's in response to the far right here in Europe? Is that something that's on the horizon?
I would say when you look at the publicly traded companies, I think the areas that we're looking, particularly when you look at, okay, with nearshoring within Mexico, and then thinking about what that would mean for the broader economic impact within the U.S. market, I think industrials are probably the most obvious place to play there. And it's also one of the largest areas when you look at another part of the market that we've been investing in is mid-cap. So looking at that valuation disconnect between those mega-cap companies.
But is that a tailwind or is that a hindrance?
I actually think it's a tailwind when you factor in the nearshoring component of it and you factor in what we just talked about. What do we know to be true when it comes to, regardless of who wins the election, what do we know that is going to, where we're going to see continued investment? The Gen AI story, yes, you could invest in those mega cap tech companies, but you need the infrastructure, you need the energy, you need the data centers to be able to do that. Even when you look at our energy grid within the U.S. and the investment that I think both sides, right, of politics would be in favor of that type of spending. I think that's where if you're going to put money, I think it makes a lot of sense right now.
Kristen, thanks so much for your time. Good to see you here in London. Kristen Bitterly, Head of Investment Solutions at Citi Wealth. Coming up, we'll be back to some of those geopolitical threads that we were referencing in passing in that conversation. Ursula von der Leyen is speaking in Europe, in Strasbourg, in fact, ahead of a crucial vote later today. She's already said that Orban's visit to Russia was appeasement, a word that, of course, echoes through history, on the day that we see European leaders gathering at Churchill's birthplace in Oxfordshire. You're seeing live images of Ursula von der Leyen speaking there in Strasbourg. This is Bloomberg.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, $1 million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Europe cannot control dictators and demagogues across the world, but it can choose to protect its own democracy. Europe cannot determine elections across the world, but it can choose to invest in the security and defense of this continent. Europe cannot stop change, but it can choose to embrace it and invest in a new age of prosperity and improving our quality of life.
European Commission President Ursula von der Leyen up for re-election today, waiting for that vote a little bit later on today, 12 o'clock noon UK time, 1 o'clock locally in Strasbourg, where she was speaking. And she has been talking this morning then, Chrissy, about a whole host of things. She was talking very much there about preserving democracy and defence.
Certainly, in addition to your point, talking about the EU's climate ambitions, bolstering the competitiveness in the region. You mentioned that appeasement line as well, all coming in the push to strengthen some of those defense industries. She's also seeking down to lock a second term as head of the bloc's executive arm. Let's get more on this story on location. Bloomberg's Lyubov Pronina joins us this morning. Lyubov, walk us through the expectations of this vote. This is clearly taking longer than initially expected. Is this when she finally gets that support?
Well, the vote is taking place in Strasbourg today, as you rightly mentioned, and is going to happen a few hours later in the afternoon. We just heard Ursula von der Leyen speak on the main priorities for the next 5-year mandate, which she's hoping to get, and she has called on the assembly members, the new assembly that was elected in June, to support her. And there is an expectation that she will get the support for the second term. She needs at least 360 votes. And the political groups, the main political groups in the parliament, that are part of the coalition, the Christian Democrats, the Socialists and the Liberals support her. But she's also trying, she has been trying to gain more support from other parties, including the Greens.
Let's talk about what she's been saying thus far. Let's give us an idea of the kind of the policy story that is developing from her. What should we expect if we do get another 5 years from Ursula von der Leyen?
So we got an earlier look into the political guidelines that were published shortly before her address to the Assembly this morning. And what she has said at the beginning, that in her view, the main challenges of this era are climate, competitiveness, and also security. So basically, these are the main pillars that she will be using to base her next 5-year mandate policies on. And she spoke across the board. She spoke about climate, about competitiveness, about trade, about international relations, support for Ukraine, relations with China, improving relations with the UK, and also domestically improving the housing situation for Europeans that are suffering from the cost of living crisis and actually live in quite a lot of anxiety. So she addressed many of these subjects, but high up is the prosperity, sustainable prosperity and competitiveness. And she also said that all the goals that were mentioned before in the previous mandate, and central to this is the so-called Green Deal, which is aimed at achieving climate neutrality on the continent by 2050. That should stay the course, that should remain there.
Lyubov, just briefly, what happens if she doesn't get the votes? I know she is expected to get the votes, but what happens if she doesn't?
Well, if we look back to 2019, she won with a very slight margin of just 9 votes. And in private conversations with lawmakers the days before, they were saying, oh, it can be very tight. But then yesterday they were feeling more relaxed about it, that she will gain the support of the required majority. If that doesn't happen, then we'll have to go back and new candidates will have to appear. But again, there is a wide expectation that she will get through this vote today, and we'll hear about it in the early afternoon. The vote takes place at 1 Central European time, and sometime past 2 we should get the results.
Thank you very much. Okay, so we'll look for those votes later on early afternoon. Bloomberg's Lyubov Pronina with the latest on the goings-on in Strasbourg. And some of the lines we've heard from Ursula von der Leyen will be resonating at Blenheim Palace today. Bloomberg's Oliver Crook is there for us, of course, this gathering of European leaders taking place at Blenheim. And this line around Hungary's Orban and his visit to Russia as being appeasement, Oliver, that's no doubt something that will be talked about at Blenheim.
Yeah, no doubt, Anna. As you say, we're at Blenheim Palace, the birthplace of Winston Churchill. And so when this idea of sort of appeasement within Europe for what many in Europe consider to be almost unanimously a fairly large adversary in the form of Russia, it really does resonate. And it is something that is going to steal the spotlight. We should also say, Anna, that this began. Viktor Orban went first to Kyiv, then to Moscow, then to Beijing, then to D.C., but also to Mar-a-Lago, right? And that was a couple of weeks ago. And we have to say that the U.S. electoral campaign has changed massively since he had since he made that visit. And during that time, he also sent a letter to the EU saying that basically Europe needs to prepare for a new president potentially in the White House and really betting on Donald Trump. And that has sort of materialized in a sort of more dramatic way than we had anticipated with the assassination attempt. And of course, now the difficulties that Biden is having. And right now, for all of these leaders, and Orban will be here, there's going to have to be that discussion. But it also centers around now how they want to build a security pact that goes beyond just the EU, that brings in the United Kingdom, that brings in maybe other countries here in Europe. That is going to be the main focus here. And of course, the question for leaders and the question for European leaders, and they need to really ask themselves this question now, are they willing and are they capable of supporting Ukraine all on their own without the support of the United States?
And where in that logic or in that equation does the UK actually fall here? Keir Starmer has had a really intense couple of days, arguably early start to his time at Downing Street, first at the NATO summit and now here. Is there anything from a UK side that's kind of seen as a deliverable here?
So this is the security pact, I think, is what we're trying to get the details on. So this is the thing that's been billed as one of the big concrete deliverables. There is not a lot of detail of what this would look like. But Kriti, why it's important for the United Kingdom is because, as we just heard from Ursula von der Leyen, first of all, they're going to appoint for the first time ever a defense commissioner. Of course, defense has been a huge issue within the EU. There are vast sums of money that they're hoping to deploy to that. But not only to spend more on defense within Europe in terms of building out their militaries, but to spend those dollars and those euros within Europe, not just send it over to the United States. The question is, does the UK qualify as being within Europe when it comes to that spending? And that will be absolutely crucial for the UK defense industry. Has a number of fairly prominent companies. If those EU funds can sort of go to the UK and sort of prop it up and be considered EU spending, that is going to be a central question here. And it's really central for Keir Starmer, who has said very explicitly he wants to redefine his relationship with Europe. There are a lot of questions around that about what sort of mandate he has to do that from within the UK, but also what the EU will allow. The question is, with Trump potentially a more likely presidential outcome in the United States, does that give more incentive within the European community outside of the EU to band together into a more cohesive bloc?
Ollie, one of the themes that unites European politics, and to a certain extent US politics as well, is immigration. This is a subject that Keir Starmer needs to get invested in. Giorgia Meloni's invested in. Emmanuel Macron is invested in. What are they going to talk? Is there, again, a potential deliverable out of these meetings that are going to take place, these one-on-ones that are going to take place, to maybe find a better solution for Europe to manage this holistically?
So listen, I think that migration is one of the key questions here today. It was one of the key questions of the Brexit vote that really sort of defined UK's relationship now to the European Union. And it is inevitably a question that is going to come up and a question that leaders need to address, even those that are the most sort of reticent to do so. I mean, you've heard it even in Germany with Olaf Scholz, who at first was sort of reticent to embrace this as a topic that needed to be addressed, has now sort of come on board. So that is one of the sort of main 4 sessions that is going to be here at the EPC today. It is actually going to be chaired by Giorgia Meloni, which is sort of interesting to see how the Starmer-Meloni relationship will go forward. But we should also mention, Guy, that in the von der Leyen speech and the sort of priorities that she set out, they're going to triple the number of border guards within the European Union. So it's really interesting to see, sort of an echo of what we hear frankly, from Trump and from the conversation that's happening over in the United States. So certainly this is going to be a big topic. And we should say also that obviously Turkey is here, who is a key player within that discussion.
Great stuff, Ollie. Thank you very much indeed. Ollie Crook joining us from Blenheim Palace. We'll continue to keep you up to speed with what is happening, not only at Blenheim, but also in Brussels as we watch the countdown to that vote a little bit later on for Ursula von der Leyen. What else are we watching today? 1:15 p.m. UK ECB, that's the UK time. ECB rate decision. Lizzie Burden's going to be all over that one. You've got claims every Thursday. We'll get them a little bit later on at the United States. Last set of data have been quite interesting, actually, on that front. Logan and Daly are going to be speaking from the Fed. Finally, of course, the main event today, Donald Trump speaking at the RNC, accepting the nomination. This has been, people are arguing this has been a fairly well-managed convention, that actually the Republicans are looking organized versus what is happening, certainly with the Democratic Party right now. I'm assuming they're going to want to continue that today and reinforce that theme as well.
Well, the bar is low in the entire political landscape to look organized right now, especially for the GOP that had that kind of Rolodex of speakers that kept needing to come in and out of Congress. It's interesting because it's coming off of J.D. Vance's speech in the last 24 hours. And he, of course, comes in with some very strong rhetoric on manufacturing, China, jobs, and going towards Mexico, of course, as well. But I think what's important is when he was chosen, he was really chosen to appease some of the, and I'm realizing I'm using the word appease, but to really kind of speak to the more right-wing members of his party. If you see President Trump echo that same rhetoric, it shows then that he's going to be leaning more in that direction when it comes to his policy agenda, which we haven't seen yet. He's been pulling back from that because one of the things he's kind of learning from some of his other candidates that he was in the running for, Nikki Haley, for example, is that he needs to prove that his economic agenda is sustainable, it's one that's going to help the deficit, and it's actually one that's not chaotic and one that is well thought out.
And perhaps, you know, we can find plenty of economists who say that some of the policies that Trump is proposing right now are going to be inflationary, so how he counters that will be interesting. I'm very interested in what J.D. Vance had to say about Wall Street and around how they position themselves around the business community, because this has been a rich theme for populists in Europe and even just right-wing parties in Europe that aren't necessarily of the typical populist variety. I'm thinking about just the Conservatives here in the UK being rude about business under Boris Johnson, and that seems to be an area where we've seen movement in the right of politics away from embracing business and what Donald Trump stood for decades ago towards something that is a more anti-business in certain places.
Essentially, that's where the money comes from, though.
Yeah, how's that say?
Which is an interesting kind of relationship. It's going to be fascinating to hear what he says. The fact that Nikki Haley supported him, does that necessarily mean that Nikki Haley voters will support him as well? I think is a really key question. If he tacks to the right, does he take that center ground with him?
It's a begrudging endorsement, and then he's like, well, I guess he's the nominee, so I guess we'll support him, which is kind of how she said that. It's also important to your point on the business as well, because we know J.D. Vance comes from a Silicon Valley kind of background as well, but he's really, President Trump's really trying to appease to the labor portion. The Teamsters Union showed up for the very first time at the RNC, which is traditionally a left-leaning group.
Yes, yeah, absolutely. Pieces are moving around when it comes to the business and politics. We are going to be live on the ground at the ECB as well. It's been such a busy morning. We
can't believe we haven't talked about the ECB.
Not expecting a rate change though, but any guidance on where we go next will be, of course, closely monitored. Live in Strasbourg at the ECB in Frankfurt, also live in Oxfordshire at Blenheim Palace. This is Bloomberg.
Of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
your challenge. Britain's elected was going to keep Green World Cup. This is a 3 as the economic picture covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Calls for Joe Biden to step aside intensify. Senior Democrats, including Chuck Schumer and Nancy Pelosi, reportedly ramp up the pressure. Well, an earnings beat from TSMC fails to stop shares sliding. The chip maker joins the global tech sell-off on fears of more U.S. restrictions on semiconductor sales to China. Plus, Keir Starmer hosts European leaders for the first time as the UK and the EU look to reset their relationship. We're live from Blenheim Palace in our weekly UK show at 9:30. Now, first thing is first, so let's take a look at the European markets map. A lot of the focus today will not only be on some of the data points, but also Fed speakers, and then we look at technology. The CAC 40 pretty much unchanged. You can see the FTSE gaining some 0.7%. A little bit of pressure on the DAX. Now, tech stocks definitely trying to claw back a little bit of this week's slump as we had some positive earnings from Taiwan Semiconductor Manufacturing. That seems to be restoring a little bit more of the sentiment towards the sector. Let's also check cross-asset, a couple of things that we need to keep an eye on. Of course, all eyes on the ECB, all eyes, of course, on some of these speeches from Fed governors. And then we also have a pretty important sale of bonds in Europe. The first one, actually, that France has since the election. Euro-dollar 109.31, the U.S. 10-year yield at 4.1749. Again, investors preparing for policy decisions from the ECB. Expected to keep rates, of course, steady, but we'll see whether Madame Lagarde signals any further cuts in her monthly press conference. So for the conversations that matter and the insights you need, the Pulse starts now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. Happy Thursday. We have a lot of things going on. I'm Francine Lacqua here in London. Now, to talk about President Biden, to talk about what this means for the markets, of course, President Biden yesterday saying that he had COVID. Let's talk about all of these markets. Let's talk about Fed speak. Let's talk about some of the tech as well. We're joined by Anne-Katrine Pedersen, investment strategist at BlackRock Investment Institute, and Bloomberg's Justina Lisa. Thank you both for joining us. Justina, we've been talking about a great rotation. We've been talking about the Trump put. I mean, when's the ideal time to start really assessing what happens in the U.S. and the reverberation that U.S. politics has across the world?
Yeah, I think it's hard to tell, right? I think what people are tracking are like the odds of a Trump election. And that kind of tends to be a bit clearer, sort of like closer to the election. Of course, we're also watching, is Biden actually going to be the candidate here? But so far, we've seen quite a big reaction in bonds. And I think that is also somewhat feeding through to the equity market through this great rotation, because people are thinking, are we going to be back in sort of an inflationary environment? And that seems to be kind of what's playing out in equity markets right now.
How do you see the great rotation behaving? Because I feel it's like 2 days of great rotation and then question marks, and then maybe we go back to it. Are we going to have a very volatile period?
Yeah, I think what traders are reacting to is we've seen this mega cap tech trend looking pretty overstretched. And so they really took that kind of
U.S. rate cut signal as a sign to really rotate into a lot of the laggards. But I think beyond that, I mean, by now we've kind of had, 6 days of the rotation. I think it's a bit harder to tell because everyone's always been enamored with the tech safety trade, and they kind of like it regardless of the environment. And small caps have faced a lot of structural headwinds over the last few years. They're more indebted. They're not kind of taking advantage of these big secular trends. So I think it really remains to be seen whether this rotation can continue.
Yeah, let's also get into the conversation on Katrine Peterson from BlackRock. And Katrine, when you look at some of the great rotation, again, how much further can it go? And what are you looking at in terms of good investments going forward?
Yeah, thanks so much, and good morning, Francine. So what we've witnessed is that the cooling inflation in the U.S. has led to a reversal of the momentum trade. But what we are keeping a close eye on is the earnings season now kicking off for the second quarter. And as a matter of fact, in Russell 2000, which has of late outperformed the large cap tech-heavy NASDAQ, in the Russell 2000, we are observing that 40% of earnings are currently contracting, whilst consensus and also the BlackRock Investment Institute expect that in terms of corporate earnings, the tech leadership will likely continue. And hence, we think that this rally of the past days could lose some steam, and we stick to watching what the transformative impact will be in the earnings seasons, the transformative impact of investment in the real economy related also to artificial intelligence. So be it technology, be it infrastructure, and also energy systems that need to be built for this transformation.
Yeah. So, and Katrina, I mean, again, U.S. stocks hit a new record high. Then we're seeing, some of what's going on in Treasury yields. Again, how do you see these opposing views, and when do they stabilize, if they stabilize?
So what we continue to prefer at the current juncture is the U.S. equity market based on the AI theme. When it comes to the U.S. Treasury market, we're tactically, so over the next 6 to 12 months, neutrally positioned, as we think that the long-term yield can swing in both directions. What we like, though, is income in fixed income. This relates both to the U.S., but also to Europe, as well as investment grade credits. So we think in a world where rates will be structurally higher, yes, we're talking about rate cuts, and the ECB will be meeting today. And the market consensus on a Fed rate cut in September is building. But this will be an environment where the room for rate cuts is relatively limited. So we think that rates will be structurally higher, and this supports the appeal of income and fixed income.
Okay,
so the shorter term.
Justina, keep it there. So the shorter term. Let's talk politics now. Joe Biden under renewed pressure to step aside after several top Democrats met with the president this week. Now, Chuck Schumer and Nancy Pelosi are among those who are reported to have spoken to him about his candidacy. Meanwhile, the president has caught COVID. The symptoms are said to be mild. Now, ahead of his diagnosis, Biden said Kamala Harris, his vice president, could lead if his health declined.
Only if I was told that there was some medical condition that I had. And that's not the case. So, but I understand what people say. Look, I'm only 3 years older than Trump, okay? And I think I'm in a little better physical shape than he is.
Well, let's bring in Bloomberg's Europe executive editor, Chad Thomas. Chad, Biden cannot seem to catch a break, can he?
Yeah, Francine, if you think about the image this projects coming down with COVID, he had hoped to do some counter-programming to the Republican National Convention this week. Instead, he's in isolation because of that COVID diagnosis. This comes as U.S. media is reporting that the two top Democrats in Congress, along with Nancy Pelosi, of course, the former House Speaker, have all privately told the president that they do not believe he can win in November. They're citing some internal polling from Democratic groups that show Biden is significantly behind in a number of key swing states. Pennsylvania, Michigan, and Wisconsin, all those states are swing states in the Midwest, and that polling shows that those are states he has to win, and at the moment he's 5 percentage points or more behind in those states. So the bad news continues to unfold for President Biden. It'll be interesting to see what he has to say now in the coming days about his nomination. The New York Times is reporting this morning that he is privately opening up to listening to some of these arguments about him stepping aside, but that he has made no decision as such that he would in fact do that.
Chad, meanwhile, J.D. Vance has also given his first speech as the Republican vice presidential nominee in Milwaukee, throwing his weight behind Donald Trump.
They said he was a tyrant. They said he must be stopped at all costs. But how did he respond? He called for national unity, for national calm, literally right after an assassin nearly took his life.
So, Chad, what can you tell us about this? First of all, it doesn't seem that Donald Trump is trying to widen his base. It's almost looking like he actually appointed an heir to be his vice president. But has he called for unity?
Yeah, well, it seems like, Francine, he's called for unity within the Republican Party, and that is exactly what they've been projecting at their convention. If the Democrats are in disarray, the Republicans have all lined up behind Donald Trump. J.D. Vance, of course, coming out, it was his coming out speech event at the convention. Of course, as you know, these speeches are broadcast in prime time in the U.S., so it was really a chance for him to speak to millions of Americans about his vision for the country, and that vision is very closely aligned with what Donald Trump wants. It's a working class focused agenda. Of course, again, coming back to those swing states we were talking about, they need to win also in places like Pennsylvania and Michigan, and things like factory jobs are very important in those states, and that's why you hear this brand of populism from J.D. Vance and talking about things like tariffs on imports into the U.S.
Chad, thank you so much. Bloomberg's Europe executive editor, of course, talking all things U.S. politics, Chad Thomas. Now, coming up, bullish on the AI boom. The world's largest maker of advanced chips beats estimates, but investor euphoria is dampened by fears over more restrictions on sales to China. We'll have the latest on that next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're
in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
TSMC has raised its projections for full-year revenue growth after results beat estimates, riding a global wave of spending on AI. Now, ADRs in the chip maker for Apple and NVIDIA are higher pre-market. Shares closed lower in Taiwan as Donald Trump told Bloomberg that Taiwan should pay for the U.S. for defense against China. So we'll have a full roundup of course, what's supporting these markets. So much talk about NVIDIA, but also the tech sector, whether that can continue. So let's get back to our guests, Anne-Catherine and Justina, to figure out what's next for the tech market. And we were talking about the great rotation. When we look at some of the things that we're watching, for Justina, look, the NASDAQ looks set for the small bounce after this TSMC beat, but there's a bigger question on what happens with the trade tariffs, what happens with chip makers in general. What do you think will support European markets going forward?
Yeah, I think that's really a tough one. I think for Europe, which has always been kind of a more externally oriented market, I think what people are watching is, what's coming out of China, for instance. I mean, we're kind of in the middle of the Chinese kind of plenum right now, where we will hear more about Chinese plans to kind of boost the economy. So I think that's one. And I think, the tech move is definitely another. And I think what's kind of happening this week is also that, the fears that the tech trade is overstretched. I think that's kind of also hanging over this sector, in addition to the news from the U.S. about the trade curbs. But, at least from kind of what we're hearing from TSMC, I mean, the fundamentals are strong. They raised their full-year revenue kind of guidance. And so it seems like they're kind of still seeing really strong demand to kind of invest in AI.
And Catherine, what's your take? I mean, again, AI is here. AI is something I hear from like 50% of the people that, it's going to be even faster than we think. And then 50% of investors think we're just getting ahead of ourselves because we're overestimating the impact it has and the timeline of it.
Yeah, I think the impact and timing is a key one. So we continue to be overweight the AI theme. And our base case is one of the concentrated AI scenario over the next 6 to 12 months. That means that it's a handful of tech names, but also energy and utility companies that belong to the initial winners of how the AI theme will evolve over time. So this is why we also continue to like US equities and prefer US equities over Europe, even though we witness an ongoing earnings recovery in Europe, but we think that corporate earnings will continue to come in stronger in the US. And one important thing in this context is that the current tech concentration we are monitoring in the US is in this environment of transformation, of big investments that are taking place in this transformation, that this is a feature and not a flaw of the current environment in our view.
Okay, keep it right there because I want to talk a little bit about central banks and, of course, some of the data. And the European Central Bank will be back with Anne-Catherine Pettersen and Justina Lee in just a second. But let's get over also to Tim Colpin to talk about TSMC and some of the things that we've learned. Tim, thank you so much for joining us. So TSMC has raised its full-year sales growth guidance to be above, I think, mid-20% in terms of U.S. dollars. What does this tell us about the strength of this sector, but also of this company particularly?
Well, it's great news for TSMC and TSMC shareholders. Unfortunately, for the rest of the sector, it may not be as good. TSMC, in addition to raising their own forecast for the year, kept the same level of expected growth for the industry overall. They expect the overall chip industry to grow around 10%, which is exactly what they said 3 months ago. So there's no upside for the rest of the industry. In addition, they basically left unchanged their CapEx guidance. Now, they narrowed the forecast range of their CapEx guidance, but essentially it was unchanged. So for the equipment sellers like ASML or Tokyo Electron, not a lot of upside from TSMC either. But TSMC themselves, yeah, they're looking better, probably because they have a lock on the very leading edge technology, the AI technology, which is used by NVIDIA and AMD and Intel and all those other companies that are in the AI space, and they're able to raise the prices of their products a little bit. So in a nutshell, great for TSMC, not necessarily everybody else.
So what about news of possible chip curbs and comments from Donald Trump about Taiwan's chip industry?
It's hard to slice that any other way than negative. On the Biden side, Bloomberg News reported that the Biden administration may tighten the curbs on equipment that gets sold to Chinese companies. So that's ASML, Tokyo Electron could be affected there. On the Trump side, Donald Trump spoke to Bloomberg Business Week and basically repeated a statement that he'd said previously that Taiwan stole 100% of the U.S. chip industry. It's not factually correct. The implication being that if he was to come back to power, he would do something about it. Not sure exactly what, but possibly tariffs or do more to ensure that there is more chips made in America. But either way, it's very hard to see good news from either Biden or Trump in the Asian chip sector.
Tim, thank you so much. Bloomberg Opinion's Tim Colpin there with the very latest on the chip sector. Coming up, it's the ECB decision day. Attention will be on President Christine Lagarde and the prospect of autumn rate cuts for the euro area. We're live in Frankfurt next, and this is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back, everyone. So could the ECB be about to prime investors for another rate cut, even if a move today is effectively ruled out? Now, traders are likely to watch closely for clues from President Christine Lagarde on the prospect for the September meeting. Let's bring in Bloomberg's Lizzie Burden, who's in Frankfurt for us. So, Lizzie, first of all, markets are looking for a September cut, but also the Governing Council seems to be pretty divided. Indeed, Francine. It's all eyes on September, as you say, because by then there'll be more data on inflation and wages. You've had lots of policymakers expressing, including Christine Lagarde, that they would prefer to go when there are forecasts, and that is once a quarter, of course. And also by September, there is going to be more clarity, hopefully, on what the Fed's doing and on how the French politics are going to shake out, her homeland, of course. So then the question today becomes how Christine Lagarde communicates that September rate cut. She's very well learned the lesson we expect from the June cut of the dangers of over-telegraphing what comes next. So I expect that she is going to draw on the Sintra playbook and really emphasise data dependence, not try to knock the market expectations, which currently are fully pricing one more rate cut, really leaning into 2 more rate cuts as well. And I think the big question is whether she reintroduces the easing bias in the guidance that accompanies the decision later today. Lizzie, thanks so much. As always, Lizzie Burden there in Frankfurt for the European Central Bank. Now still with us, Anne-Catherine Pedersen, investment strategist at BlackRock Investment Institute. Anne-Catherine, what are you expecting to hear from President Lagarde later?
So I think in a nutshell, she will convey a message that the ECB will be on hold today, so no rate cut expected, but not be on autopilot going forward. So I expect that the ECB, that Madame Lagarde will reiterate the data-dependent meeting-by-meeting approach and not recommit to a September rate cut, because basically the ECB, and that's also a message that the ECB conveyed at the Sintra conference, is waiting for and will act on forthcoming data until the September meeting in order to confirm its assumed, its projected inflation path by 2025, so hitting the 2% by the end of 2025. Investors should keep the big picture in mind, in my view. This is that rates will likely be structurally higher in the euro area, so this is not your typical rate cutting cycle. The ECB is cutting when growth is basically improving, inflation is still above 2%, unemployment is at the record low, and we think that sticky inflation will mean that policy remains tight, and this is supporting the appeal of income in our view.
Yeah, Anne-Catherine, thanks so much. Anne-Catherine Pedersen there from BlackRock Investment Institute. Of course, if you look at the data, we had some recent indicators that have been signaling, of course, that the euro area's recovery may have lost a little bit of steam. Manufacturing has suffered yet another blow. We're also looking at services sector slowing confidence, with confidence fading due to heightened uncertainty. Now, coming up, Keir Starmer hosts dozens of European leaders for a crucial summit at Blenheim Palace, the birthplace of Winston Churchill. These are live pictures, and we're live with the latest from there next. This is Bloomberg.
Names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Or other authorities.
Could face bigger challenges.
It was going to keep Great World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to Bloomberg UK. I'm Francine Lacroix here in London. So it's a backdrop befitting an urgent meeting. The UK Prime Minister, Keir Starmer, is hosting more than 40 European leaders at Blenheim Palace for his first major international summit. Bloomberg's Oliver Crook joins us from there. Ollie, we're just getting some live pictures of where we are. I love that Mr. Crook only travels when there's a World Heritage site to be seen. But Keir Starmer is really the man of the moment. What's he hoping to achieve?
Yeah, and Francine, just to remind everybody what this forum is, because it's hard to keep track of all these summits sometimes, even if you're attending them. The European political community is something that was born out of the invasion of Ukraine by Russia that Macron sort of put together. And what it is a really expanded group of European leaders. As you say, almost 50 leaders that are coming together within Europe to try to have that expanded tent to deal with sort of common issues like Russia. And for Keir Starmer, as you say, this is one of the first times he will meet many of these people as prime minister, really for him to come out on the stage and really to act as a host to do so, right? And that is a sort of huge undertaking and politically very, very valuable for him. This sort of thing, these meetings would take months, if not years, to organize individual bilaterals with all of these leaders. So for him, it really sets him as the leader of the United Kingdom. Now, what he is hoping to achieve here is a little bit more tricky. He wants to reestablish his relationship with Europe. Obviously, this is the first chance that the Labour government has to do so in 14 years and also post-Brexit. And of course, the sort of concrete deliverable that we're looking out for here, Francine, is whether or not he can start to begin the conversation around an EU and UK security and defense pact, the details of which we don't yet have, but that's what we're trying to get out of this meeting today.
Yes, we were just looking at live pictures, of course, of the European Council President Charles Michel, who just a couple of days ago, I think, fired back at Viktor Orban's to set the record straight over the Hungarian Premier's freelance diplomacy with Vladimir Putin, Xi Jinping, and Donald Trump. He was just greeted by Keir Starmer. And again, this points to the fact that American politics, frankly, can't be avoided. What's the line between Milwaukee and Blenheim Palace?
Yeah, listen, Francine, and I'm glad that you started there with Viktor Orban, because as you say, Viktor Orban just went on this massive tour from Kyiv to Moscow to Beijing to DC, but also to Mar-a-Lago to meet Donald Trump. And actually, we just heard from Ursula von der Leyen laying out her priorities for this next commission just a few minutes ago, in which she was calling basically, Viktor Orban's so-called peace mission an appeasement mission. And Francine, those are really powerful words, particularly when you think about where this conversation is being held, the birthplace of Winston Churchill. And so when we talk about a European leader within the EU appeasing what is almost unanimously seen within Europe as a significant adversary in the form of Russia, it really resonates back to the sort of the Second World War. So what we need to do here, and what the leaders need to do here, is to really reevaluate the conversation around Donald Trump and American politics that has frankly radically changed over the last 2 weeks. And for these leaders here, they need to ask themselves a very serious question, one that I don't know that we have a clear answer to. Is Europe capable and is it willing to stand by Ukraine all by itself? That is going to loom very large over these discussions here, Francine.
Ollie, thanks so much. Oliver Crook there at Blenheim Palace in Oxfordshire as we continue, of course, seeing world leaders, European leaders arrive at Blenheim Palace being greeted by Keir Starmer 2 weeks into the job. Now let's get more on the details of today's summit with the Chief Executive of the Centre for Economics Business Research, Nina Scarrow, and Bloomberg's Joe May. So thank you both for joining us. Joe, it's quite exciting. I mean, it's incredible to think it's only 2 weeks ago that we had the election, July 4th. And since Keir Starmer went to NATO in D.C., he's done a number of things. There was the King's Speech, and now he's meeting a lot of these leaders. What's his main message to them?
Yeah, I mean, he's really hit the ground running with all these events, as you say. I mean, the key message is a reset. He wants to reset those relations with Europe after friction and tension under the previous Conservative government, and then he wants to build those closer ties. I think as Oliver was mentioning there, because there's that context of a potential Trump-Vance presidency and how that could mean the UK finds itself without the closest of allies in the White House, and therefore they'd want to have other allies in the Western world they can draw upon for support and strength. And that's why I think the EU and all those European leaders become very important for Keir Starmer.
Yeah, how much of the conversations, will be around Donald Trump and tariffs, and how much will it be European leaders looking to someone who has a big majority, or certainly has a majority and is in charge for 5 years, Keir Starmer, to also help with a lot of these challenges?
I think quite a bit. Obviously, a big unknown in terms of who is going to be in the White House. And we didn't hear quite as much during the campaign from Labour on their foreign policy intentions as much as we did on the domestic agenda. But it seems like that is going to be now one of the areas of focus. I will say that I think what's been quite clever is in terms of resetting this relationship with Europe. They have set themselves some relatively bite-sized targets to focus on. We've heard some mentions on the import and export of food, on veterinary certificates, on artists wanting to go on tour. So I think they've set this, overarching intention saying we want a closer, better relationship, but then underneath giving some really bite-sized pieces where hopefully they can make progress and then, label that a success.
Yeah, so it's bite-sized because actually there's no, I guess, appetite from the EU to renegotiate, or is there no appetite for the UK Prime Minister to open that can of worms?
I just think even though, Labour has been doing things at incredible speed domestically and internationally, even in the King's Speech yesterday, we heard, I think, 39 different areas discussed. So there's a lot on the agenda. I think, after that sort of goodwill, early settling in period, there is going to be a little bit of a meeting reality period in terms of how long these things actually take. And I've heard that in the UK civil service that they are, whilst, they may or may not be personally optimistic with a closer relationship with Europe, they are a little bit worried that a lot of work they've been doing in recent months and years under the previous governments is now going to be reset. So I think, given that how long just everything takes on that sort of level, it's good to have bite-sized targets.
Yeah, and I guess when you talk about, the European reset, it's whether they work in tandem to try and counter China and whatever comes out of the US, or whether it is the UK and Europe getting closer together. Can it be a bit of both?
I think it definitely can. I think that, the UK now with Keir Starmer, he sees himself as someone who does want to be an ally of Europe. He does want to reverse that animosity that we've had in recent years. He does see strength in that kind of unity he can build there. He's appointed Nick Thomas-Symonds in the Cabinet Office, one of his key allies, to oversee that European relationship. I think that, for me, shows how much importance he puts on it. And I think that this is just the beginning. We're going to see much more, I think, in terms of building those bilateral ties, but also working at an EU-wide level. I think he's trying to secure an EU-wide returns agreement on migration as well. He sees migration as a really important issue, and he has to have the EU on side to deal with that. So, yeah, I think this is a big, big moment for him.
And, do we know of any personal relationships or some of the strongest allies in Europe? Again, I thought it was quite telling, and I think, Joe, we spoke about this when he went to NATO at the DC summit, that a lot of these European leaders are actually in trouble, that he is, because of the length of his mandate, probably the strongest out there. Do we know about his relationship with Macron or Olaf Scholz or others?
It's hard to say, and especially because of that piece, because some of them are, in trouble at home. And, you mentioned Macron there. I do imagine, given what's been happening in France in the past month, I'm sure, of course, the relationship with the UK will always be an important priority, especially given the size of the number of French citizens living still in London and the importance of immigration patterns there. But, would it be their absolute top two priorities? Probably not. I think there'll be a lot to handle on the domestic agenda first.
I mean, there was an awkward moment, of course, where J.D. Vance also called the UK Islamist, the first country with also the nuclear power. The reaction from the UK administration was, frankly, I think, one of confusion. They weren't really quite sure what the parallels were. I mean, are we going to see a bit of rhetoric, or is the UK just going to leave it?
Well, I think the Foreign Secretary, David Lammy, was asked about those comments this morning. He said he didn't recognise the comments, which is kind of a very diplomatic way of saying, let's just ignore that was said and try and rebuild that relationship. I mean, David Lammy says he does have a good relationship with J.D. Vance because of their similar backgrounds that they've had. But yeah, I think this is the big looming thing that's coming for the UK government. How might you deal with the Trump-Vance presidency? It's going to be tricky, given there are kind of philosophical differences there. But Keir Starmer has always said that what matters to him is it's the office of the US president, it's the office of the UK Prime Minister. There's a historic special relationship between those two entities, and he wants that to continue. So I think that'll be his stance.
Thank you both for joining us. Joe Mazer, of course, from our Bloomberg government team, and Nina Scarrow from the CBR stays with us. Coming up, Keir Starmer announced nearly 40 bills, yes, 40, at the King's speech yesterday. This is across areas as diverse as energy, housing, infrastructure, AI, and cybersecurity. Our deep dive into Labour's first King's speech in 15 years. That's next, and this is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg.
Well, Keir Starmer has warned that there is, quote, no quick fix for the UK's problems after Labour's first King's speech in 15 years. Well, with us, Nina Scarrow from the Centre for Economics and Business Research. Let's also welcome Bloomberg's John Stepek. So the way it works out, I mean, we kind of love the pageantry and pompousness of it all, but it's, you know, Labour writes a speech, then it's King Charles III that delivered it. There was a lot in there. I mean, frankly, there was a lot, John. What did you find, you know, that was, A, surprising and that would actually make a meaningful difference to this country?
I mean, the things that might make a meaningful difference are changes to the planning rules. So the idea is that the central government will be able to override objections from local government, and clearly that is an issue. I mean, we've got a Green MP the other day saying that he's going to block the construction of pylons, which are necessary to, kind of turn the grid around and get the renewable energy from where it's generated to where it needs to go. Now, clearly that's in response to incentives from his local voters, which are actually, going against the raison d'etre for the Green Party. So I do think that central government taking responsibility for those kinds of decisions is actually probably a good idea. Yeah. I think it can probably force through construction, and construction is good for GDP growth.
What's a bad idea?
Honestly, the thing that stands out to me, so Office of Budget Responsibility, so the OBR, regulator of our public finances. It was set up in 2011, basically a piece of political electioneering from George Osborne to paint the previous Labour administration as being careless with the public finances, which you can argue about either way. But the point is that's what it was for. And now it's getting beefed up to paint the previous Conservative administration as being careless with the public finances. And that's really bad. You're basically enshrining a body that is structurally pro-austerity and at the same time making arguments that you are a pro-growth government. And I just think this is handing this stuff over to another technocratic, unelected body is a mistake, and it's one that future governments of all shades will come to rue.
Do you agree with that, Nina?
I also found the timing of it really interesting because for the past year and a half, there have been very high-level discussions in the UK about whether OBR has too much power in the sense of how fiscal rules are tied to their forecasts. And the conversations have very much been along the lines of how do we modify this? So how do we water this down? How do we move away from this model? So it was a little bit like, okay, not only are we maintaining that, we're now actually going firmly in the 180-degree other direction.
Nina, so what do you think the underlying reason for that is? Is it to kind of, just show the world and investors that Labour want to be fiscally responsible? Or is it just so that if they can't spend, then they blame it on an outside body?
Ooh, I don't know. I do think there is, basically that policy announcement, I would say, is at the crossroads of politics and economics. In terms of the economic justification, I could see more reasons for the conversations happening previously about, the fiscal rules are close to meaningless and can be prisoner to basically, this body, and, they impact policy at a very high level. I do wonder if there is a little bit of political motivation to kind of give a formal platform to continue pointing out the mistakes of the previous government and the mini-budget.
Do they need to do that? I mean, they've won, they have a 5-year parliament.
Yeah, they won, but I agree with Nina. I think it's more political than that. It basically boils down to Liz Truss blew up the economy. Here's us proving that we are not going to do it. And it's more just to, like I say, it's a political throwback to a complete misinterpretation of what happened under the Liz Truss government in the first place. But I just think it's risky because all you're actually doing is the economics in this is not settled for a start. Nobody knows at what percentage of debt to GDP your economy collapses or slows down. It's all relative to other countries anyway. So to start tying in something like this formally to effectively the UK's unwritten constitution is not a good idea. And really, it's going to have future chancellors and Rachel Reeves just scurrying around to find ways to get around these rules that they've created for themselves. It's a waste of everyone's time, and I think it's a really bad idea.
And John, in terms of inheritance tax, I mean, in terms of personal finance, are there things that you would have wanted to know that weren't in there?
Definitely. I mean, I think inheritance tax I'm very curious about because it's one of the few taxes that wasn't ruled out on a personal finance level, and I'd be very surprised if they don't make changes there. The other thing I'm probably more interested in even is the pensions side of things. So obviously we're short of money.
Yeah.
There's an awful lot of institutional capital, which actually just means your pension fund.
No.
The government wants to direct that into its pet projects. So how is it going to do that? How much of that's going to be temptation and how much of it's going to be coercion? And, how are things going to develop along that axis? That's something I'm probably most interested in seeing.
All right. Thank you both for joining us. Nina Scarrow, the Chief Executive of the Center for Economics and Business Research, and Bloomberg's John Stepek. In fact, be sure to subscribe to John's daily newsletter on personal finance, but much more money distilled. Coming up, what does the new Labour government mean for impact investing, especially if Donald Trump enters the White House later this year? We discuss that next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Welcome back, everyone. Now, the King's speech also included new legislation for a national wealth fund. It aims to boost public and private investment in industries like ports, green hydrogen, and gigafactories to make batteries for electric vehicles. Now, my next guest says the proposals are exciting and could be a starting point to harness the power of private capital across the rest of government to drive societal change. Well, Bella Landemore is executive director of the Impact Investing Institute and also former senior advisor at the government's Inclusive Economy Unit. So, Bella, thanks so much for joining us. Now, if you look at impact investing, how much of this new wealth fund will actually channel through green technologies and really give a boost to the UK?
Well, the government's committed to leverage £3 for every £1 of public spending, which is hugely exciting. But we want to see that extended across government, that approach to leveraging private capital for public good. We have here a government that has huge ambitions to address all sorts of societal challenges and very constrained spending. And we have a pool of capital which is growing significantly in the UK, that's channeling billions into affordable housing, green energy tech, urban regeneration, SME finance.
I mean, I guess the question is, this is kind of on a very smaller scale, what the Inflation Reduction Act in the US is set out to do. Do we have enough foreign direct investment? Do we have enough private capital from outside the UK that's willing to put their money to work?
That's a great question. I think it remains to be seen. The impact investing market in the UK is very strong in terms of the capital that's domiciled in the UK, and that's global capital. So that's going to the challenges here and to challenges around the world. It remains to be seen the extent to which we can attract the investment towards the opportunities in the UK that the government's looking to finance.
So are there specific sectors, are there parts, for example, of the green agenda that you think will attract more capital than others? Again, there are questions about hydrogen. There are a number of questions on some of the renewables that need to be built or scaled up.
Well, I mean, the challenges in terms of our green agenda are huge. So that's a huge opportunity for impact finance. But what we need to do is ensure that we're attracting finance towards other complementary initiatives. We have huge challenges in the housing space. That's both from a green perspective and from an affordability and accessibility perspective. We have big challenges to address in farming, for instance, making it more sustainable, in urban regeneration across other infrastructure. So the challenges are really across the piece. Green is a big part of that, but we need to make sure that people are not left behind in that agenda.
I know you had some figures, Bill, on the, global impact investing. That market is just over $1 trillion. I mean, it's really small compared to the rest of the world. I mean, if you have some of the, AMs that we speak to, they have like 5 trillion all to themselves. There's also backlash, especially from U.S. investors, about some of the initiatives on impact investing. Does that stabilize? Does it take longer? Or does it actually move backwards?
So I think it's clear. It's important to say that the backlash is more against ESG investing. And that's been highly politicized. Impact investing is different. Impact investing is seeking societal and environmental benefits alongside a financial return. It's a purposeful approach to creating benefit for people and planet and generating alpha.
But it mirrors ESG, doesn't it? I mean, we're talking about labels that could be different, but for investors, if they fear a backlash, they kind of put it all in one basket.
It can be put in one basket, but ESG as an acronym has been politicized, but the policy and the regulatory environment across the globe is pretty united in the fact that material factors are relevant factors to investment decision making. And we know that all sorts of non-financial factors that can be broadly described as social, environmental governance can be material to business performance. And that's not going to go away. And that's being enshrined across the piece. And like you say, in the States, although there's been a backlash against ESG, the Inflation Reduction Act has channeled unprecedented amounts of investment into green technologies and local regeneration.
Are you expecting the new Labour government to change some of the regulations surrounding this?
Hopefully they are going to speed up some of the regulation that's really been coming down the pipeline anyway. So we've got the FCA who have introduced an impact label. That's going ahead and happening. And Labour's committed to transition plans becoming mandatory. So we want to see these kind of initiatives really endorsed and taken forward from here.
If Donald Trump gets a second term in the White House, what does that mean for impact investing globally?
It's a great question. Like I say, I think ESG might continue to be politicized, but so long as we're really clear on what we're doing to get investment into the people, the communities, the solutions of the future that are going to make our economy more resilient, more fair, more green, I don't think you can really argue with that.
Bill, is there something that, the capital markets are missing at the moment, or do you think they're kind of, there for the journey and just trying to figure out what the best way to deploy capital is?
Well, I would say that they're missing the opportunity to really think about the opportunity for impact investing. So when you think about impact as a lens on risk return and how you're going to mitigate some of the risks arising from negative impacts and then capture the economic opportunity in the solutions such as green finance, such as regenerative farming, such as natural capital.
Thank you so much. That was, of course, Bella Landemore, Executive Director of the Impact Investing Institute. Now, we have still quite a lot of leaders arriving at Blenheim Palace. Again, Keir Starmer spending the UK election campaign promising to reset a European relationship soured by Brexit. Just 2 weeks into his tenure, he's immersing himself in that endeavour as he hosts more than 40 of the continent's leaders at Winston Churchill's ancestral homes. You're looking at live pictures of him with the NATO leader, also Jens Stoltenberg. The informal format of the gathering means that he also is essentially speed dating some of his counterparts to see the way forward. The brief up ahead, and this is Bloomberg.
You announced recently, I believe, is that you're going to do something called the Steve Jobs Archive. And what is that designed to do?
We are trying to honor and elevate individuals through the inspiration of Steve and his life. But I think much more importantly, we are trying to find the best way to communicate to others his ethos and his sense of enormous human possibility so that people can encounter the archive and feel inspired to do something even greater in their own lives, or to stretch what they think is a boundary or something that they didn't contemplate for themselves. So we are still in the collection and development mode. We're building out programs. I think you'll see in the future, you'll see some scholarships and fellowships. You may see some publications, but It's much more about forward-looking and inspiring people to think about how they can be part of positive movement.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Good morning from our global headquarters in New York. I'm Danny Berger. Managed Cranny is off for the week. Welcome to Bloomberg Brief. Let's set your agenda. Mounting pressure, President Biden faces even more calls to step aside as the White House says the former president has caught COVID. Countdown to the ECB, the central bank is expected to keep rates steady as policymakers await for more data. And TSMC boosts its forecast in a show of AI confidence, but the chip sector takes a beating on political risk. We take a breather from that political risk, but it was abundant yesterday. The statistics, again, another potentially historic day. You saw the Philly Semiconductor Index see its worst day since that concern over COVID in March 2020. U.S. stocks to themselves break a 52-day winning streak of not seeing any losses more than 1%. The S&P does fall more than 1% yesterday. A slight rebound this morning. We're up by 1/3%. So that kind of rotationary flavor we'd been getting in this market, that takes a breather. Because yes, everything fell yesterday, but the Russell 2000 didn't fall by as much. This morning, it is declining, down by 0.2%. The bond market, for its part, has been rather tricky. It's this push and pull between the economics and that of the politics of higher deficits, and that means that you don't want to buy duration. Yesterday, we were buying duration. The 20-year auction goes off without a hitch. That helps to kind of quell some of the movement, the pressure upwards in yields. Not to mention that both Waller and Williams came out yesterday, not explicitly saying it, but their language suggested that by September, they're going to have the confidence to cut. This morning, it is pressure. It is yields higher by about, let's call it 3 basis points. For spot 18% is where we stand. That's a picture in the U.S., but we are just hours away from the ECB decision. They are largely expected to hold rates. Traders, for their part, they are closely watching from clues from President Lagarde on the prospects for September meeting, again, because we mostly assume that they're not going to move this meeting. Let's bring in Bloomberg's Lizzie Burden, who's in Frankfurt at the ECB headquarters. So, Lizzie, why is that? Why do markets assume, and most economists, that it's a September cut that's more likely than a July cut today?
Yeah, Danny, not a single economist that Bloomberg surveyed saw a rate cut today, and it's because by that September meeting they'll have 2 more CPI prints and more data on wages and productivity. They'll also have the quarterly forecast, and they'll have, hopefully, a bit more clarity on what the Fed wants to do in terms of rate cuts and how the French politics is going to shake out. I'm sure there'll be a question on that for Christine Lagarde in the press conference. It's her homeland after all. But it means that today is less about the decision itself and more about the communication around September. I'm sure she has learned her lesson from that June cut, the dangers of over-telegraphing what comes next. So I imagine that she's going to stick to the spiel from Sintra, where they had that ECB forum, and emphasise this data dependence, try not to knock market expectations of 1 or 2 more cuts this year. And the question, therefore, is left, do they reintroduce the easing bias? But that one for the guidance and the press conference later.
Well, all you had to do was listen to Isabel Schnabel to see this coming. Before the cut in June, she had clearly said, it's probably going to be a one and done. How is the Governing Council shaking out at this moment? Is there a clear divide?
Yeah, always listen to Isabel Schnabel. It'll be interesting because you've got the Hawks kind of warning about services inflation at 4%, annual wage growth around 5%, unemployment towards a record low. So they're saying, what's the need to hurry to cut rates at this point? But then the Doves on the committee warning that the recovery in growth is already losing steam. You've got profit margins shrinking because companies are absorbing those higher labour costs instead of passing on the burden to consumers. But what I think is really telling, Danny, is you've even got the Belgian central bank chief, Pierre Wunsch, who's usually towards the hawkish end, even him agreeing that the expectation in markets of 1 or 2 more cuts this year actually looks reasonable. And even if not everybody is singing from that hymn sheet yet, it is becoming a more popular opinion.
Lizzie, we appreciate it. Lizzie Burden in Frankfurt, who'll be sticking around through the programs for that ECB decision in a couple hours' time. Joining us now is Ludovic Sabran, chief economist at Allianz. Ludo, really great to see you this morning. It's definitely been too long. Okay, so you basically write this idea that, okay, they cut last time around, but it was awkward because they had higher inflation and wage data just before the cut. Oh, and not to mention, they all basically increased their forecast for inflation. But there's a difference between it essentially being awkward and a mistake versus a policy error. So let's talk about that last decision. Where does it land on that scale?
The jury's still out on this one because I think the last meeting, maybe the ECB got a bit ahead of itself. That's for sure, because the latest inflation print was reassuring, but the wage growth re-accelerated to 4.2% year on year in June. So there is this idea that may not go for the same mistake twice. I have a hard time calling it a mistake now that the Fed will finally cut. Because remember, that was the whole idea, that can the ECB continue to cut and go ahead, push through a loosening cycle without the Fed doing it, with the cost that it may entail on capital flight from Europe to the US, right? Now we have a bit more certainty that the Fed will start a rate loosening cycle, so the ECB can cut as they did, then pause, then cut again in September. The real question now is, will they cut again in December if the Fed manages to push through 2 cuts? And of course, the terminal rate is the big question that everybody has, especially as President Trump could be more inflationary and holding back with the Fed, while the ECB is really a bit in a true scenario when it comes to growth, right? But it's been quite a politically intense few weeks, right? You wouldn't want, if you were President Lagarde, to be accused of cutting to help the French, for example.
No, it's a good point. You don't want her to be seen as the kingmaker. I guess as maybe she was seen for Italy when the ECB stepped in to help. Of course, I mean, Ludo, we have to talk about this. It's maybe not just French politics she needs to worry about, especially since the worst of possible outcomes didn't play out, but it's American politics. Yes, that story has some legs and we don't know exactly how it looks, but it is a Trump that is threatening more tariffs, and in the Business Week interview basically said that Europe treats us violently. How does the prospect of tariffs on Europe from the US complicate things for the Governing Council?
The real downside scenario for Europe would be if the Fed is stuck and cannot deliver 5 rate cuts in 25, because I think Europe will have to deliver 4 rate.
I'm just going to jump in, Ludo. I think we're having a little bit of issue with your sound. We're going to check on that while you work things out. I don't think you are just speaking slowly. But again, just to recap, what we are expecting from the ECB is no change from them in terms of their decision today. It will be interesting to see how those inflationary forecasts point out, because as we were just discussing with Ludo, basically last meeting, they cut, but then they upgrade their inflation forecast. So we'll see if we have any sense of direction from President Lagarde. She might not want to sort of indicate anything either way because of the issues and the mistakes, in Ludo's words, that she made last time. Okay, before we get to Ludo, again, let me just give you a quick check on these markets. The euro at this moment, a little bit weaker versus the dollar. Dollar is better. I think we do have Ludo at this point, if we can get back to him. Ludo Sabran of Allianz. I'm assuming you weren't just speaking slow there, Ludo, and we were having sound issues. Okay, but let's go to...
Accent, oh, that's the German telecom, Wi-Fi bandwidth. Yeah.
Very French of you to blame the Germans.
The Germans always blame.
Okay, so let's pick up where you left off. This idea, higher inflation in the U.S., a new Trump presidency means that the ECB can't cut as much. I just wonder what the impact is of this stop-start approach from the ECB. If their aim is to prevent a hard landing, secure a soft landing, but still ensure economic growth in Europe, how far does that stop-start approach actually go?
I think, to be fair, for the ECB to be less contractionary for Europe, they would need to deliver at least 4 rate cuts in 25. So that's quite a normal loosening cycle, right? So that's very important to know whether they want to do that, knowing that services inflation is so sticky, right? And remember, it's very political a moment because of the fiscal consolidation needs. So you started to have, Minister of Finance Lindner in Germany saying ECB shouldn't get into politically strong disincentives when it comes to cutting too much and not providing market discipline to some of the countries that need to adjust almost 1 percentage point of GDP per year to be, committing to some of their fiscal orthodoxy, right? So the ECB has to cut, but if they cut too fast because of the stickiness of services inflation, it will be seen as they give a bit more room for fiscal. I'm more in favor of giving a bit more room to fiscal given the current situation, but that's true that it will be a bit of a catch-22 all through 25, to be honest.
Ludo, you point out, which I think is interesting, and again is something for our American audience to wrap their head around in this country with a savings rate of 3.9%, is that the savings rate in Europe is 15%, even though wage growth continues. What does that mean, again, not just for the landing, but for the takeoff, for the possibility of robust growth in Europe?
Look, the second half of the year should be a moment of real income growth because inflation is growing less fast than wages. So we should have a bit of a pickup. I think growth really bottomed out in H1 and we should have a pickup in H2. The problem is we have 0.7 growth expectations for 2025, while the US has 3 times as much. So the problem is really this growth discrepancy between the US and Europe, which is very strong. And of course, that means that even if we take off, that would be maybe 1 percentage point growth. And so that won't provide enough confidence to unleash the savings rate. We have record savings rate in Germany, 19%, France, 17%. And we don't see the forward visibility for people to spend that because of precautionary savings for pension reform, because of negative wealth effect from the housing market correction. And so that's the big issue if I were Minister of Finance right now, is to make sure people spend, maybe like Americans have spent over the past 2 years, and that created almost 3% growth.
Fair enough. Ludo, before we go, I want to talk about the Fed, because we had both Waller and Williams speaking yesterday, 2 very influential Fed members, basically saying that September looks likely. They didn't say that explicitly, but they more so did. The market has already priced in a September cut. What difference does it make to you to have these types of Fed policy speakers leaning more dovish, getting more confidence?
Well, it definitely gives me the idea that we will not have a contractionary monetary policy. So it's very important for me that the Fed starts cutting, because the worst thing that could happen now is that the US is in over-tightening mode and we have a recession coming from the US. So this boom-bust scenario. So the fact that the Fed is not a laggard and they actually want to cut, that's reassuring about the end of the overheating in the US, but more importantly about the global financial cycle, because as you know, everybody is dependent on what the Fed's policy is. Emerging markets, think about those emerging markets that are starting to cut. Had the Fed not started to anchor this idea of cutting, I would be worried for Brazil. I would be worried for Mexico. I would be worried for some of these economies that have, they need to start cutting to get a bit of a breather for growth. And so the Fed cycle is very important for these economies right now.
Yeah, it's interesting that it's maybe not a verbal cut for the U.S., but a verbal green light for all those other countries you talked about. Ludo, thank you so much for joining us. Enjoy Germany. Ludovic Chapron of Allianz. Okay, let's get to some of the other top stories that are trending on the terminal this morning. First up, TSMC raises its full-year revenue forecast, showing confidence in the AI boom after a day of declines on politics. The supplier for Apple and NVIDIA expects sales to grow more than the mid-20% range it had projected previously. The chipmaker also beat analyst estimates on quarterly net income. And another company lifting its outlook, it's Novartis. That forecast, though, is overshadowed by disappointing sales of the drug maker's prostate cancer drug, Pluvicto. Still, the Swiss firm sees operating income growing to mid to high teens while keeping its overall sales forecast unchanged. And over in the UK, wages grew at the slowest pace in almost 2 years. It's the latest sign of a weakening labor market. That data is keeping alive hopes for a rate cut by the Bank of England in August. As for private sector wage growth, which the BOE watches closely, it slowed to 5.6% from 5.9%, so that is the weakest reading since 2022. Coming up, the dam finally breaks for Biden, maybe. After testing positive for COVID, the president is also fighting more calls from this time prominent Democrats to step aside. And later this hour, we're going to speak to HSBC on the market impact of the heightened expectations for Trump victory, what means the fact that he wants a weaker dollar, all of that to come on your Bloomberg Brief.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Today, Balance of Power is live in Milwaukee, Wisconsin for the Republican National Convention.
I love Milwaukee. I was the one that picked Milwaukee.
We'll bring you breaking developments,
everything you need to know leading up to the nomination,
insightful interviews,
and some fascinating conversations from Milwaukee,
and informative analysis, all leading up to special coverage Thursday evening, including Trump's acceptance speech. Tune in today on Bloomberg Television.
I was told that there was some medical condition that I had, and that's not the case. So But I understand what people say. Look, I'm only 3 years older than Trump, okay? And I think I'm in a little better physical shape than he is.
That was President Biden in a BET interview before he tested positive for COVID on whether he would consider turning over the presidency to Kamala Harris within the next 2 years. Joining us now is Bloomberg's Chad Thomas. Chad, I mean, it's a bit awkward for the president. Granted, the White House has said that it's a mild case of COVID, but is there some degree where we look at that BET interview and we say, the president is giving himself an out because previously he said only the Lord Almighty could convince him to step down. Now he says, or not step down, but to step aside for the next election cycle. But now he's saying it could be health that allows him to step aside.
Hi, Danny. Good morning. Yeah, it does seem like he's opening a bit of a window here. And the New York Times is reporting this morning as well that he has privately been telling some Democrats that he is open to discussing this. He's clearly said that he still doesn't intend to step aside, but that he's at least willing to listen to the arguments that are being made by some top Democrats as to why he should step aside. So it does seem like there's a little bit of an opening here, and he also, of course, is dealing just with the imagery of this. As you say, the White House says it is a mild case, but now he isn't able to basically do what would have been counter-programming to the Republican convention because he is in isolation at home in Rehoboth.
I mean, it's a great point, right? He was trying to get there out on the campaign trail, which he was doing interview after interview. Now he can't do that. And the thing we're left with is Biden saying is, if I had a health issue, I'd step aside. Meanwhile, I mean, the calls and the reporting on this, Chad, it is one story after another. First, Adam Schiff speaks to the LA Times saying that he is called for Joe Biden to step aside. Then you get this news that Chuck Schumer and Hakeem Jeffries are trying to delay having him as their formally nomination process. And then you have Nancy Pelosi speaking to Biden. Again, all of this, different reports from Times, from CNN, some of our own reporting. Is this finally, Chad, the dam breaking?
Well, Danny, it does seem like it's headed in that direction. As you say, there are all sorts of U.S. media reports, including reporting we've done ourselves, that President Biden is being told privately by a number of top Democrats, all those individuals that you mentioned, that he may have to step aside. They are not only concerned about losing the presidency, but also what it might mean for Democrats in both the House and Senate if he were to lose. And there are some media reports that he is also being shown, President Biden is being shown private polling that shows he is falling behind in these key swing states, Pennsylvania, Michigan, and Wisconsin. And as you know, those are key to any chances of him winning the presidency once again.
Yeah, I mean, again, I think just the sheer number of leaks themselves even tell us something. The fact that it is a fractured Democratic Party that's willing to go to the Times, to the Journal, to CNN, and discuss these things. And then the counter-programming of that, Chad, is the RNC, where you have people who were once never-Trumpers, were once his rivals in the primaries coming and speaking, of course, the chief of which being Senator J.D. Vance, who officially accepted the GOP nomination for vice president. Here's what he had to say in his speech at the RNC.
We need a leader who fights for the people who built this country. We need a leader who's not in the pocket of big business, but answers to the working man, union and non-union alike. A leader who won't sell out to multinational corporations, but will stand up for American companies and American industry.
I mean, really laying out a very specific version of the Republican Party. Chad, what were your takeaways from that?
Well, it's really, in many ways, Danny, about the imagery, right? It couldn't be more striking. You have the Democrats fighting with one another, both publicly and privately, and then you have this real unity being shown at the Republican convention, and J.D. Vance at the forefront of that. And here you have someone who is working class, someone who is young, out there speaking on Trump's behalf.
Chad, thank you so much. That is Bloomberg's Chad Thomas. We'll catch up with you again in a little bit. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
It's your Bloomberg Brief. I'm Danny Berger. Let's go through the front page news, what's making headlines around the world, maybe aside from U.S. politics. First up, Chinese President Xi Jinping has mapped out his long-term vision for the nation's economy. After a key meeting wraps up, they will push ahead with its pursuit of high-quality development. The plenum was the first meeting focused on reform since 2013. Okay, elsewhere on the FT, Warner Bros. Is weighing a possible split to boost its flagging stock. They discussed splitting its digital streaming and studio business from its legacy TV networks like CNN and HBO. The CEO there is also examining several strategies as he navigates the company's $39 billion debt load. And this is the best one. The Wall Street Journal has this. Ken Griffin now owns an 150 million-year-old Stegosaurus, because why not? The billionaire purchased it at Sotheby's for $45 million. That's the most ever paid for a fossil at Sotheby's. Now, he's not going to even keep the thing. He's going to lend, quote, Apex to a museum in the U.S. Now, he does have a history of trophy purchases. He outbid crypto investors in 2021, for example, for a first edition copy of the U.S. Constitution. Incredible. Okay, coming up, we are going to be speaking with HSBC on the heightened expectations for Trump victory, what it means for these markets, on your Bloomberg Brief.
Names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable. Not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the From our global headquarters in New York, I'm Danny Berger. Vanna's Cranny is off this week. Let's set your agenda. Mounting pressure, President Biden faces even more calls to step aside as the White House says the former president has tested positive for COVID. Countdown to the ECB, the central bank is expected to keep rates steady, with policymakers waiting for more data. And TSMC boosts its forecast in a show of AI confidence after the chip sector takes a beating from political risk. We bounced back from that this morning, but it was a tough day. It was the worst day for semiconductor stocks since COVID times of March of 2020. It is that rotation that has been in full force that takes a breather today. S&P 500 futures up by 0.25%. It is Russell 2000 futures, which fall 0.1%. But hey, after 5 days of gains of something like 11%, maybe it is a rally that is due for a breather and some profit taking. Tech outperforms this morning after strong TSMC earnings. Is that enough to push through the political noise? NASDAQ futures up 0.5%. Meanwhile, your 10-year yield up nearly 3 basis points. 4.18% is where we stand. A 20-year auction that was plenty strong yesterday, showing that there is appetite to buy duration despite political concerns. Now, on that point, President Biden, he is currently in isolation after contracting COVID. Take a listen to his interview before he tested positive on whether he would pass the torch to Vice President Kamala Harris if his health declines.
Only if I was told that there was some medical condition that I had. And that's not the case. So, but I understand what people say. Look, I'm only 3 years older than Trump, okay? And I think I'm in a little better physical shape than he is.
Let's get back now to Bloomberg's Chad Thomas. Chad, I actually want to pick up on where we left off. The idea, not necessarily of Biden's COVID timing, but of the leaks coming from the Democratic Party. It is a drip feed of either people publicly saying they believe Biden should step aside or privately, perhaps the most high profile of which being Nancy Pelosi. What does that tell us about the state of the Democratic Party right now?
Hi, Danny. Well, it tells us that top Democrats want Biden to step aside. This isn't accidental that these leaks are coming out across all sorts of U.S. media, including to us, that top Democrats are privately telling him that he can't win. There is some reporting in U.S. media as well that top Democrats have told him, look, we're telling you this privately now, but if you don't step aside, we're going to go public in the coming days. So there surely is a lot of pressure here being exerted by top Democrats. They're concerned not only about potentially losing the White House to former President Trump, but also what it might mean down ticket for people who are running in tight electoral districts, whether for Senate or for Congress.
Yeah, I mean, there was this belief that after the events over the weekend, the quite shocking events, we should say, of the attempted assassination of Donald Trump, that it gave Biden some breathing room, that it took focus away from him, and thus he continues to be top of the ticket because there is chaos elsewhere and you need a steady hand. That hasn't been the case. And Chad, what I find really interesting about this is the polling discussion, that people come to Biden, Nancy Pelosi, one of them, saying, look at the polls. We can't win with you at the top. And Biden says, well, for every poll you have that says I can't win, I have one that says that I can. I mean, how are people trying to frame this at the moment, Chad?
Yeah, the polling discussion is very interesting, and you have private polling that the Democrats are doing that shows, not only that Biden is losing when you look at the sort of from a national point of view, but in very specific swing states, he is falling further behind Wisconsin, Michigan, Pennsylvania, states that he needs to win, and he's even now very close with former President Trump in Virginia, a state that he won by 10 percentage points the last time around. There's also a public poll that was out yesterday that showed 2/3 of Democrats want him to suspend his campaign and allow someone else to run. Surely top Democrats, when they go to him, are pointing to that to show that the support of his party just isn't there.
Chad, talk to us about the split screen America has right now of, on one hand, those leaks and calls from the Democratic Party, and on the other hand, the RNC right now.
Yeah, it couldn't be more different. You have this real unity that you're seeing within the Republican Party. Many people who were anti-Trump before, people who ran against him in the primaries, now lining up to say that they support him. People like Nikki Haley, and of course, at the top of that is J.D. Vance, who is now his vice presidential candidate. He was speaking last night in front of everyone at the Republican National Convention, and of course carried live on primetime across TV as well. And he's projecting exactly what Trump wants, this idea of a working class individual, someone who's younger, someone who backs his populism. He's certainly not someone brought onto the ticket to draw in voters in the center, but really someone who's going to fire up the base, the Republican base, and get them to the polls come November.
Chad, we really appreciate your reporting all morning. That is Bloomberg's Chad Thomas. Now, HSBC's Dara Mar weighs in on the impact of the current political landscape, writing, "We concede there is momentum in dollar selling, which has seen it mostly ignore potentially positive factors like strong U.S. retail sales, Fed rhetoric, rising U.S. yields, alongside polls showing heightened expectations for a Trump victory." Dara joins us now. He is the head of FX strategy at HSBC. Dara, thank you so much for joining. I mean, there are so many political threads to pick apart, but let's just start with this idea that I guess the jawboning from Trump, from J.D. Vance, did lead to some dollar selling. How enduring is that?
I think we'll have the law of diminishing returns there. You know, we had this during the first Trump presidency. He talked about the strong dollar's killing us. You remember all of that? And, you know, it did have an impact. But as it was repeated, of course, it has a diminishing impact. We've heard it before. You get that with central bank rhetoric as well. I think what we had this week was perhaps a more exaggerated response in the currency market. Because, oh, wow, it's been a while since we heard that. And he obviously still holds that view. So I think there was a revelation there. But I think for it to be repeated and carried on, I'm not sure that we get that same kind of punchy impact in the currency market.
Is there an issue, though? You look at a day like yesterday, where it wasn't just the FX market, it was this more general risk-off, whereas equities sell off, bonds kind of don't do much. But dollar in most of this year, in scenarios like that of this market, has been, well, the dollar's a haven. The U.S. economy is so much stronger. Just throwing a political element into it mean that the dollar's qualities as a haven aren't as strong?
I guess it becomes more complicated. I mean, one of the curiosities at the moment, as you describe accurately, that the dollar over time is a safe haven. And typically that's reflected in an inverse correlation with equities. When equities goes up, dollar goes down. Over the last month, the dollar correlation with the S&P 500 is a big fat zero. So it's like it doesn't care. And you know, sorry to diminish, because I know we all want to talk about politics, but I also think the dollar doesn't particularly care about politics. People say, what does, you know, this rising probability for Donald Trump to win the overall presidential election? We've had that, let's say, for 3 months, where it's been accelerating. Dollar was down in May, up in June, and down so far in July. So what does that tell you? I think it tells you the dollar is looking elsewhere. So we have to speculate, we have to talk about it, but in reality, I think we'll always come back to what does it mean for the Fed.
I want to get to that, but I just have one more question on the politics. Sorry to do this to you, Dara. I just want to get on this idea, again, that Trump and J.D. Vance both want a weaker dollar. Both of them are talking about devaluing the dollar. And I know you very well put it in your research that tariffs, that sort of policy leads to a stronger dollar. So let's say they were like, Dara, we want to bring you on to consult for us. What can we do to weaken the dollar? What could they actually do?
Well, look, it's tricky, and look, I want a Lamborghini. It doesn't mean I'm going to get one, right? So let's be honest. So you can see the appeal of a weaker dollar, particularly for a narrative of we need to boost American manufacturing, we need to be competitive. Others are, if you like, using their weaker currencies to gain an advantage. That's what we heard in the first administration under Trump. If we get a second, we're likely to hear it again. But it's hard to deliver because the U.S. economy is powering along. GDP now, according to the Atlanta Fed, 2.5%. The rest of the world is kind of struggling. China is under delivering. Europe barely coming out of recession. The UK is actually, I guess, doing a little bit better. But you still feel there is this US exceptionalism story. It draws in capital. You got nice carry in favor of the dollar. So sure, they may want a weaker dollar, but the fundamentals at the moment still support and keeping a strong dollar.
Okay, well, let's talk about those fundamentals at this moment. Let's talk about the Fed, the thing that actually matters for the dollar. We had both Waller and Williams yesterday using language that essentially said by September we're going to be ready to cut. The market has already priced that in. At one point it was 100% probability.
Right.
But how much more juice does that trade have? If this is a market that's already pricing in 3 cuts.
It's dull, isn't it?
Yeah.
Do you remember?
That's why we keep talking about politics.
I mean, I'm much older than you, but I at least remember a time where you could come to a Fed meeting and not know what they were going to do, right? Now it's like you're handheld months, weeks at least in advance. So yeah, September feels like that's what they're guiding us all towards, the first rate cut in September, fine. I guess where the challenge becomes is the market wants to think, not only are we going to get a second cut this half, they want to flirt with the idea that we get third. Now, allowing for the fact that July is a non-event, that means successive rate cuts, or else it means they start by doing 50. And I think both those scenarios require you to have a much more sinister view on the US economy. You need initial jobless claims to be firing higher. You need the labor market to be falling off a cliff. We're just not seeing that. So, I think we get 1 rate cut, maybe we get 2, but the idea that, hey, 2's nailed in and we should really be thinking about a third seems a stretch to me that I think makes the dollar at these levels, a reasonably good option to buy.
I wonder if some of the dollar strength also comes from this idea that at least verbally saying, look, we're going to start cutting, allows other central banks to start cutting. And that, in turn, again, just comes back to the dollar and strengthens it.
Look, I'm glad you mentioned relatives because that's what it is about. And I think maybe it's in America that we kind of lose sight of that we're very Fed fixated. Okay, so the ECB aren't going to do anything today, whatever. But, they've already started cutting. The Bank of England will at some point start cutting, other central banks. So we are very Fed-centric, and the currency market is very Fed-centric. And I think that misses a part of the equation, which is they're not going to be the only ones doing this. And, so you think you're absolutely right. I think that opens the door to currency weakness elsewhere. And remember, too, that these other economies that are struggling, like Trump, like Vance, they might quite like weaker currencies there as well. So they're not necessarily going to be at least the dollar remaining stable.
Mark McCormick to me yesterday put it that currency traders are serial monogamous and they can only think about one thing at a time. So maybe that's also the issue. They can only think about the Fed. Though the one central bank that would absolutely welcome that, a weakening in the dollar, would be the Bank of Japan. And we saw that yesterday, the yen falling in a big way. I just wonder what you make of a day like that, where it's based on politics, not necessarily something changing in Japan.
It shows you where positioning is at, though, doesn't it? So we had we assume the big intervention last week, and that prompted a big move lower in dollar yen. And you would have thought, okay, we've cleared out the weak longs in dollar yen. And yet yesterday, when you had that news, you had those comments, and well done to Business Week and Bloomberg for getting that, that were market moving. But the exaggerated price action in yen, I think, reflected positioning and reflected, as I said at the top, that this felt new again. Even though we'd heard it before, it felt new for this election cycle. So I think that's why it's such a big impact. But yeah, the MOF will be sitting back going, thank goodness. And the BOJ will be thinking about their meeting, at the end of the month going, okay, that might just reduce the pressure for us to hike rates.
Yeah, and again, it's this irony that the MOF jawboning and intervention doesn't do a lot, but it's Trump that does something for them.
Jawboning, though.
Yeah, for sure. Hey, Dara, it was so wonderful to catch up with you. Thanks for coming in early for us. That is Dara Mar of HSBC. Okay, coming up, we're going to talk about TSMC flexing its pricing power, a show of confidence in the AI boom. Shares up nearly 2% in the pre-market for its U.S.-listed shares.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers. It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
It's your Bloomberg Brief. I'm Danny Berger. A quick check on TSMC shares listed in the U.S. getting a boost. Pre-market of nearly 2%. The chipmaker lifted its full-year revenue outlook. Tom McKenzie joins us for more. Tom, this, of course, comes after a day when TSMC was punished, as was the entirety of the chip sector, on politics. What does this show us about the balance of this market of earnings, fundamentals, versus the politics coming through?
Yeah, there's a tension there, certainly, between the demand for AI and then the politics that continues, of course, to evolve, and more negatively, as you've said. And we'll get into the details of that and the implications for this company longer term. But the near term, the most recent quarter, you've seen a 36% increase in profits for TSMC, which, of course, churns out those AI chips, the GPUs for the likes of NVIDIA and Apple, of course. It's looking at margins, Danny, of 53%. The CEO saying, when our clients and customers do well, we do well. And that is certainly articulated and underscored by that target around margins. They're also narrowing their focus in terms of CapEx. Really important for analysts because that talks to the demand that they see going forward. They've actually raised it to the higher end of their range, their previous range, to between 30 and 32 billion US dollars. This is a company that sees continued demand then for those AI chips. They continue to build out to try and meet that demand. The CEO saying that the gap in terms of supply versus demand is still wide and takes them into 2025. The other side of this for TSMC is that the smartphone market is also starting to turn around. So on the two sides, the AI chips and then smartphones that had been in the slump, that is starting to come through for them, and they are continuing to build around the demand needed for AI. Really interesting, for the first time in their earnings, the demand for AI, revenues from AI, I should say, came in above 50%, making up the majority of their revenues, more than half of their revenues for the first time for TSMC. But you're absolutely right, the political headwinds are also there.
Let's talk about those. Okay, TSMC falls 8% in the U.S. session yesterday after Business Week's interview with former President Trump, where he more or less says, we're not going to come to the rescue of Taiwan, or we maybe won't because they have the entirety of the chip business. Again, the fundamentals for TSMC, Tom, as you were just laying out, are so strong. So what about the long term then, if there is this new geopolitical risk that we have to factor into the company?
And you saw that, as you say, because of the risk that a Trump administration, if that's what we see in January of next year, doesn't take that line around protecting Taiwan, then clearly the foundries of TSMC are at risk if Beijing pushes ahead with their idea to bring Taiwan back into the fold. TSMC are planning around this for the longer term. They're building out foundries in Japan. They're building out and investing in foundries in Europe. They're trying to mitigate some of those contingencies, but that will remain a risk. And from the other side of the political spectrum, of course, the Bloomberg reporting that the Biden administration is looking to severely increase the restrictions of the supply of tech into the chip sector of China, and that came through yesterday as well. So those two factors, both from Trump and Biden, coming to the fore in terms of the geopolitical risks for the semiconductor sector. Then you have Goldman Sachs saying, look, some of these mega cap tech names, maybe they're overspending on AI. But again, I'll take you to that gap that remains between the supply and demand. Barclays saying that gap is likely to expand not just to 2025, but to 2026.
Tom, thank you so much for that. That is Bloomberg's Tom McKenzie. Okay, let's stick with earnings because we had, on one hand, good TSMC earnings. United Airlines was a different story. Its current quarter's profit was below Wall Street estimates. They expect ticket price pressure to last through mid-August. Let's bring in Bloomberg's Sid Phillip on this. Sid, it's something similar to what we heard from Delta. And I think it came to a shock as a lot of people because this was supposed to be the time that, sure, consumers weren't spending on goods as much because of those price sensitivities, but they were still spending on fun. So why? Why is there this dampened demand for summer travel?
Yeah, so for the airline industry, it is a massive sort of drain because summer travel is basically when they make most of their money. And for carriers like United and Delta, they were expected to be sort of raking it in during the summer season, and that isn't happening. That airlines talking about how that's being impacted by overcapacity in the general market from the low-cost carriers, and that's really sort of had a dampener on summer, the outlook for summer, and also sort of yield pressure, and that's sort of adding to their pressures as they go into the sort of slower months.
And of course, it's not just United, it's not just Delta. Lufthansa also recently had their earnings where they warned about the same exact thing. So what does it mean in terms of capacity, for example? Because they're all talking about that they have more seats than can be filled. Should we, for example, be expecting for some of that capacity to come offline and for us to have to spend more on ticket prices?
Yeah, so at the moment, I think the airline industry is has clamored about capacity and said the fact that they haven't been able to get new planes. But the fact remains is that the ramp up from COVID has been sort of rapid, and that's there's been rapid in terms of both fare growth as well as capacity growth. And I think we're sort of reaching a peak of normalization in the industry, and I think that's where the airlines are sort of struggling because costs have also gone up, and if they're not able to sort of keep growing revenues, that might sort of be a deterrent to like profitability, and that's why the airline industry is sort of at the moment sort of looking for ways to try and get around the sort of overcapacity in the system. But there will be some overcapacity as lots of airlines have lots of planes that they're trying to fly and competing for the same passengers.
Yep, fair enough. Sid, thank you so much. Bloomberg Sid Phillips there. Okay, a quick check on this bond market because you do continue to see this push and pull between flatteners and steepeners. That steepener trade has long been seen as one that is a President Trump trade. In other words, you are selling off bonds, but you're doing more so on the long end because you're scared of the deficit and scared of duration, and that needs to be priced in. However, yesterday, it was flatteners with a very successful 20-year auction. Shows that there is still demand for duration. Today, we resume with the steepeners. But again, this trade just keeps getting slapped in the face with the push and pull between the economics, between supply, and between the politics. Okay, coming up, we are going to set you up for your day ahead. Another busy day, more in politics, more from the RNC. We'll lay that all out for you to come on your brief.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in New York. Okay, let's set you up for this trading day on your Thursday. The ECB rate decision, that's the main one. It comes at 8:15 a.m. Eastern. We're expecting no change. The important thing will be President Lagarde's news conference that will follow shortly thereafter, whether she signals any cuts to come this year. Then we're going to have Netflix. They will report its second quarter results after the market closed, the first of the big tech names to do so. Most of them start next week. Plus, former President Trump, he will be giving a speech at the RNC tonight as he officially accepts the nomination as a Republican presidential candidate. Yesterday, it was J.D. Vance continuing a lot of that same language, the very populist type of language, hard on China, hard on Wall Street, and talking to the middle class. Okay, let's get a quick check on your equity market this morning, because the rotation, at least for now, has stopped. It has been a forceful rotation that yesterday was underscored not by outperformance of Russell 2000, but underperformance of the big cap tech names, of NVIDIA, of the chip stocks, having their worst day since March 2020. Maybe today helps with strong TSMC earnings. Can the fundamentals come back and be the thing that saves this market over the anxiety of politics? This earnings season is going to be crucial for that. Okay, that's it for your brief. Surveillance, that's up ahead next.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
The market is well ahead of the Fed. This is clearly what's propelled a lot of the small cap optimism.
These are the other groups that are going to benefit from interest rates starting to move lower again, and investors are going to see there's going to be an opportunity there.
The Fed does not have to deliver those cuts. It just has to get the market thinking, hey, the Fed's moving that direction.
It's not just inflation that's driving cuts now. It's the broader economy that the Fed is watching.
That cash on the sideline that gets put to work in a world where all of these uncertainties of rates, inflation, and recession start to shrink.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Do you remember when the summer used to be boring? Remember that? There's nothing boring about this. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance. Your equity market on the S&P 500 firmer here by 0.1%. Coming off the back of the biggest one-day loss since April on the S&P 500. On the Nasdaq 100, the worst day since December 2022. There's nothing boring about this morning. Here's your day ahead. 8:15 Eastern Time. We get a rate decision from the ECB. 15 minutes after that, jobless claims. 15 minutes after that, a news conference with President Lagarde, and then a little bit later this afternoon from the RNC in Milwaukee, Wisconsin, Donald Trump, the former president, addressing the Republican convention. With me around a table, I get lucky this morning, Jay Pilowski of TPW. Jay, remember when summer was boring? Wasn't that great? There is nothing boring about this right now, is there?
No, not at all, John. It's been really a crazy market just in the last couple of days, going back the last couple of months. I mean, when you talk about, just as the crescendo about a narrow market and bad breath reaches its peak, right? Boom. Massive reversal.
Huge move in small caps that we can talk about throughout this morning. Need to talk about the politics as well, Jay, so let's get into it. The former president addressing the Republican convention a little bit later. We need to talk about the pressure building on Joe Biden. The dam is breaking big time, and I'll go through just some of the reports we've had, not in the last 24 hours, in the last 12 hours. This from ABC News, reporting that both Senate Majority Leader Chuck Schumer and Minority Leader of the House, Hakeem Jeffries, have indicated to the president it's time to step aside. CNN reporting that former House Speaker Nancy Pelosi has basically told President Biden the same thing in private conversations. Semaphore yesterday afternoon as well, Jay, reporting that the campaign funding is essentially drying up. Has the pressure ever been greater on this president?
Yeah, it's interesting, right, John? Because I think Joe Biden is a fighter, and this is all making him dig in. Seems to be the case so far. And what's really surprising to me is you have this massive push. But on the other side of it, you have things like 538 in their polling on the Electoral College, which suggests Joe Biden today, if the election was held today, Joe Biden would win with 277 electoral votes versus 263 for former President Trump. And yet that seems to get lost in the perspective. The other thing that I think is really powerful, and I know we're going to talk about it over the course of the hour here, is that the economic policy mix between the two candidates is night and day. And one of them is very constructive for the United States, as I believe, and the other is very destructive from an economic point of view.
Would you like to tell us which one's destructive and which one's constructive?
Well, it's not just me, right? I mean, if you look at Goldman Sachs, if you look at Moody's, if you look at the Peterson Institute, if you look at 16 Nobel laureates, all have come out and said that Donald Trump's plan is bad for the United States. It means lower growth. It means higher inflation, right? You have mass deportations. That throws a wrench into the labor market. You have tariff hikes. You have extension of of tax cuts. You have essentially fiscal incontinence. And I think it sets up the real risk of a dollar crash, which sets the stage for a reversal of what has been a 15-year run of massive U.S. financial asset outperformance.
A dollar weakness appears to be the objective of the incoming administration if they win. Are you saying that U.S. exceptionalism, dollar dominance, is going to be questioned come November if Donald Trump wins?
Absolutely. I think that's the case. And you're already starting to see it a little bit right now. It hasn't really manifested because I think, notwithstanding the kind of the frenzy around Joe Biden, the polling is not at all suggestive of the same, right? Polling is extremely tight within the margin of error across the swing states as well as nationally. And so that's why I think the market hasn't quite moved in this. But it really does set the stage for things like, okay, does this small cap rally have legs? Does this broadening out of the equity market, is it sustainable? Or do we run kind of hard into the fall and then get smacked in the face with a Trump victory that leads people to question the policy mix of the United States, and the Fed gets put in a box, right? Because the Fed is going to be cutting. I think that's pretty clear. But if we get this situation, this worry, the dollar starts to fall, the Fed has to raise rates, the dollar continues to fall, rates have to go higher. And look, we're in a bond market that has not broken out. Equities have clearly broken out. And by the way, it's global, right? It's not narrow. It's not the Magnificent Seven. ACWI, all country world, all-time highs. IFA, all-time highs. ACWI ex-US, 2-year highs. Emerging market, 2-year highs. Okay, so we're in a situation where the other countries are starting to do reasonably well. And here we call into question the policy mix of the United States and a massively over-owned asset, right? Everybody is overweight U.S. equities. Everybody is overweight U.S. treasuries, okay? So you have things like the yen. Fair value is considered to be 100. It's now at 156. You look at the euro. Fair value is considered 120. It's at 109. You look at emerging market currencies, absolutely bludgeoned. So I think it's not yet percolated in the minds of folks, but we got to be careful what we wish for. If we wish for a weaker dollar and we get a weaker dollar, then I think that suggests that the U.S. is not going to be the place to be for the next several years.
We've got a stronger dollar on the screen this morning. We're firmer by 0.1% on the dollar index. We've got a lot to talk about this morning too. Through the hour with Jay Poloski. Your equity market on the S&P 500 just a touch firmer, trying to crawl back, inching higher by just 2 points on the S&P, up by 0.05%. In the bond market, yields creeping higher back towards 420, 418.27. We can talk a lot about foreign exchange. The euro a little weaker, going into that ECB decision a little bit later. Euro dollar at 109.30. Coming up this hour, Anne-Marie joining us as Democratic leadership pushes Biden to step aside. Sheila Kahyaoglu of Jefferies as deep discounting hits the airlines, and Luke Hickmore of Aberdeen looking for a super September for global rate cuts. We begin with our top story. Biden can't catch a break. Just as illness forces the president to leave the campaign trail, the dam breaks. ABC News reporting both Senate Majority Leader Chuck Schumer and House Minority Leader Hakeem Jeffries have indicated to President Biden it might be best to step aside. Anne-Marie joins us now from the RNC in Milwaukee, Wisconsin. Anne-Marie, before we get to the events of where you are, we need to talk about what's happening elsewhere. How great is the pressure on President Biden to make a move?
It's intensifying, that's for sure. Over the past 24 hours, he had a really rough 24 hours, not to mention that the White House came out and said he tested positive for COVID-19. It is not just Senate Majority Leader Chuck Schumer going to Rehoboth Beach over the weekend telling him, we think you need to step aside, or the fact that Hakeem Jeffries as well, the House Minority Leader, saying to the president, if you stay in this race, this is going to hurt down ballot. This might mean we can lose the House. But then you have former Speaker of the House Nancy Pelosi, according to CNN, according to Politico, also having a direct conversation with the president saying, look, your polling shows that this is going to be a loss against former President Donald Trump, and you're going to really ruin the ticket for House members. So these are three top Democrats. Now, they're not saying this publicly, although if you read their statements of denials, these are not exactly straightforward denials to the press that these conversations took place. But what you are seeing is top three Democrats, especially Speaker Pelosi, who's very close to the president, telling him directly, face to face, that we think you need to step aside. Now, the president is now isolating. He's back in Delaware, and I think the next few days we should note who he is meeting with. Is there going to be a family powwow? And could he heed these calls and step aside? At the moment, though, it does sound like he is defiant. When you ask the White House what is going on, they say this is his race, he's sticking with it, he has the delegates, and he will be on the ticket November 5th.
Yeah, Marie, I think that's really interesting. Jay Pulaski here. I know we like to talk geopolitics. You know, it's funny. I think that Joe Biden is a fighter, right? And all this pressure is forcing him to dig in deeper. You talk about the down ballots. It's interesting, right? Because when you look at the Senate races in the swing states, Democrats are polling considerably above the Republican candidates. So in the Senate, which is arguably more important for the Democrats to hold than taking the House, they actually seem to be doing well. Biden truly, as you note, is not polling as well as those candidates. So I wonder if we're not getting over our skis a little bit in talking about Biden stepping away.
Well, you're 100% right that Biden is a fighter, and this is a man who's fueled really by the complications in his life, and he talks about the trial tribulations of his life, and then he's always able to overcome it. He thinks he's still in the best position to beat Donald Trump. When it comes to some of these swing states, this is where he's really struggling. But you're right, a lot of this is in the margin of error when you look at some of the different polling. But that is why you see the concern of individuals on the ballot, whether they're running for Senate, whether they're running for Congress. They think that Biden is actually potentially going to hurt their chances. There's something else that I think we should take into consideration. Biden has changed his message 3 different times when asked what would it take to drop out. When he sat down with ABC in that interview, he said he could only be convinced if the Lord Almighty came down and said, Joe, get out of the race. Then the NATO press conference about a week later, he was pressed on this issue. I was in the room. This was all anyone cared about. And he said, no, there's nothing that can make me get out of the race except maybe they came back and they said there's no way to win. The polls, he says if his team came to him and said the polls show there's no way to win. Then in an interview with BET that was on display last night, it was broadcasting, it was supposed to be this counter-programming to the RNC. He said if he had some sort of medical condition that emerged, if doctors came to me and said, you got this problem and that problem, anyway, he said that would potentially be a reason why I drop out. So I do think there is a little bit more wiggle room now because Joe Biden himself has changed the reasoning why he would get out of this race.
And right after we saw those comments about the potential of a medical problem taking him out of the race, he gets a COVID diagnosis. Can we just look at the compare and contrast? It could not be starker. Saturday evening, an attempted assassination on the former president of the United States, walks away from it with his fists raised, American flag waving in the background, compared to say this. Anne-Marie, I understand it's brutal, but look at the pictures of yesterday evening, yesterday afternoon. President Biden contracting COVID, no mask, struggling to walk up the steps of Air Force One. A little bit later on this evening, this president won't be able to counter-program the former president of the United States when he addresses the RNC. How stark is that contrast going to be?
It's incredibly stark because you also have a Republican Party that's trying to tone down the rhetoric at this RNC, and they're trying to unify really the MAGA wing of the party, this Trumpism that many hawks and many fiscally conservative and more moderate Republicans were hoping potentially this would basically no longer be the brand of the Republican Party unless Trump was top of the ticket. But yesterday, in that speech from J.D. Vance, that just showed that MAGA and Trumpism is here to stay. The populist wing of this Republican Party is now the majority of the Republican Party with this ticket. And this evening, we're just going to see that tonight with President Trump coming to the stage and formally accepting his party's nominee to face off against potentially what will be Joe Biden November 5th. And he's probably going to put his fist in the air and say, fight, 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 like he did after that that assassination attempt on Saturday. And then in contrast to President Joe Biden, who cannot counter programming because he's self-isolating in Delaware, and then it's just a drip treat of reports that members of his own party, senior members of his own party, and some of them who really love the president, like Nancy Pelosi, are telling him, we think it's time you step aside.
Let's get into that address a little bit later. Let's talk about that and finish there. I want to talk about policy. On Wall Street, for a long, long time, we've always thought of the Republican Party as pro-business. And you and I have been talking about this now for a number of weeks. We've been talking about how pro-business this Republican administration may actually turn out to be. What is going to be in the address a little bit later to maybe settle that score on that front?
Well, it's very different, I think, if you hear what J.D. Vance has to say, his VP pick, and what President Trump has to say. So J.D. Vance last night said this is no longer the party of Wall Street. This is the party of the working class. He called out auto workers in Michigan, factory workers in Wisconsin, and energy workers in Pennsylvania. Donald Trump likely chose him to park him in these 3 states to try to win the election, because if Joe Biden cannot hold the Rust Belt, if he cannot hold the blue wall, then he is not winning re-election to see the White House again. But Donald Trump is going to go to the stage today after an interview with Bloomberg Business Week, and he said he'd actually like the corporate tax rate at 15%. So I am struggling in all of my conversations here, and I had this conversation yesterday with Virginia Governor Glenn Youngkin, who they think Virginia is definitely in play when it comes to the Republican Party, about which Republican Party is good for business. And honestly, Jonathan, I still don't know the answer. It really depends who you ask, because someone like J.D. Vance wants to see a higher corporate tax rate, while the top of the ticket wants as low as 15%. So we're still struggling to figure this out. One thing that I'm continuously told when I ask about some of the rhetoric from J.D. Vance about the business community, everyone says the same thing. It's Trump's party. J.D. Vance is going to get in line.
AMH, on the latest at the Republican convention, Anne-Marie, thank you. Jay, that's a question we keep asking. Just how business-friendly is this government going to be if they get back into power?
I think that there's a clear distinction between the 2 candidates and their economic policy mix. Biden has been probably the most successful president in terms of economic policy and outcomes in 50 years or more, right? And former President Trump, I think, is his policy mix is basically fiscal incontinence, where you're talking about mass deportation to destroy the labor market. You're talking about raising tariffs 60%. You're talking about extending tax cuts. You're talking about cutting taxes even further. So I think the situation is setting up for really could be a significant shift and a significant surprise in terms of the dollar. Because if the dollar weakens when we blow out the fiscal deficit here, the Fed is in a box. I think people start to get worried about policy confusion and chaos, which was kind of the motif of the Trump first administration. Then I think you have a situation where you have a massively over-owned asset, which is U.S. financial assets represented by the dollar, that could roll over. It's at 104, 103. People target 90. As a reasonable place if it really does start to sell off.
103.83 right now on the dollar index. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira Hackes. Hey, Yahira.
Hi, John. United Airlines shares falling in the pre-market. The company reporting that third-quarter profit will fall short of Wall Street estimates. The airline saying adjusted earnings will be up to $3.25 a share in the current period. That's lower than the average $3.38 analysts were expecting. United echoing rival Delta, saying that low-cost carriers are slashing prices as they try to fill excess seats this summer, and that is weighing on the entire industry, they say. NBC reporting that New Jersey Senator Bob Menendez plans to resign. The report coming after the powerful Democrat was found guilty of federal corruption charges earlier this week. A chorus of senators, including Majority Leader Chuck Schumer, called on Menendez to step down after the verdict. New Jersey Governor Phil Murphy said the Senate should expel Menendez if he didn't comply. Murphy will pick a replacement to serve out the remainder of Menendez's term. And play is underway at the British Open Golf Championship at the Royal Troon Golf Club in Scotland. Englishman Matt Wallace shot out to an early lead followed closely by American Justin Thomas. World number 1 Scottie Scheffler is once again the favorite for the tournament. He's the first since Tiger Woods in 2013 to be the opening favorite at all 4 majors in 1 year. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, the chip makers taking a dive.
Yeah, NASDAQ is down a lot. The market's down a lot, but it's really dragged down by these select few stocks.
We'll talk about those select few stocks up next on the program, live from New York City this morning. Good morning.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Live from New York, welcome to the program. Equity futures on the S&P 500 attempted to bounce back. Not much of a bounce. We're firmer here by 0.06%. Under surveillance this morning, the chip makers taking a dive.
We're seeing big moves at the stock level. Yeah, NASDAQ is down a lot. The market's down a lot, but it's really dragged down by these select few stocks, right? So it's still very much an idiosyncratically driven, fundamentally driven sell-off rather than a macro, everything sells off together type of move.
So here's the latest. The NASDAQ 100 looking to rebound from its worst day since 2022 on renewed concerns of trade tensions with China. Jay Pawlowski of TPW Advisory still optimistic writing this. They say rotation is the lifeblood of bull markets, and it sure seems like a broadening out and rotation to X-Tech would go a long way to sustaining the bull. Jay's with us around the table through the rest of this hour. Jay, I want to talk about one name in particular before we broaden out ourselves. I want to talk about Taiwan Semi. Taiwan Semi gets hammered yesterday, but this is a company putting up real numbers. Just this morning, this is what we learned. They now expect sales to grow more than the maximum, mid-20% it had guided towards previously. Were these a buy yesterday for you?
Yeah, they were, John. I think, markets had really extended. You live by the sword, you die by the sword, right? So when you're up 20, 30% in a matter of a month or two, you pull back 8% in a day. That's just kind of normal. But the point you're making is fundamentally, these are solid, fast, rapidly growing stories, which are unique in the world, right? You're talking about forecasts that were made a couple of months ago, and they're already beating them and raising them. And this is a story we've seen with NVIDIA and other chip makers that are involved in AI for a year now, right? And so you've had massive moves, but the stocks are actually cheaper now than they were a year ago because earnings have outpaced the stock price appreciation. And so we have been and continue to be big believers in AI and big believers in the idea of the pick and shovel, right? The pick and shovel for AI is the semiconductor space. And so when you have pullbacks, those are opportunities to add in our view.
So this is what we've been rotating away from in the last week. Let's talk about what we've been rotating towards, small caps. I've had questions around this table, conversations about whether we're going into a small cap presidency with Donald Trump, the president, in the White House, heading up the United States and driving small business in America and punishing big business, big tech in particular. How do you frame that one?
Yeah, I look at it differently. I look at it that small caps are big beneficiaries of lower interest rates, right? 50% of small cap debt is floating rate versus 10% for large cap. So they are big beneficiaries. And so we've seen this movie. We saw it in the fall, right? Small caps had a 27% move in 3 months, October to December. I think they're set up for something similar. Small caps today trade at 10 times 2025 earnings on a median basis. That is extremely cheap. They're massively underowned, right? There's a massive short, which is why this has moved so fast, right? This is always the case, right? It's a massive short covering, but you have fundamentals, again, like TSMC, to support it. The other thing that I think is really, really interesting, John, is that things are broadening out, right? We just updated our model portfolios at TPW Advisory, and when I go through all the positions, all the indices, and all the things we're thinking about. And what's interesting to me is that thematics are breaking out, right? You look at biotech, you look at things like robotics, you look at things like security, cybersecurity. They're all breaking out to new all-time highs. You also look at things like infrastructure and CapEx, right? We saw the industrial production numbers yesterday. Infrastructure, PAVE, all-time highs. XLI, all-time highs. Grid, which is a smart energy for the grid system, all-time highs. And so to me, you're looking at a situation where there's multiple parts of the market starting to move in unison higher. And it's not just the Magnificent Seven anymore. And to me, that's a much more robust, much healthier market. Now, as we talked about at the open, whether with a Donald Trump, should he win, whether that sustains, I think is a very real question.
That's a good thing, so long as we aren't going into an economic downturn. Just cyclicals, for an example. Let's take the likes of Delta. United in the last 24 hours, they're warning about discounting. They're warning about driving down prices going through the summer. That shouldn't be happening if this economy is holding up, should it?
Yeah, it's so interesting, right? Because we were in airlines and jets for quite some time as a reopening play coming out of COVID. And they really just didn't work. And they still don't work, even though you read about tourism, U.S. Citizens going abroad in record numbers this year. And yet that obviously doesn't seem to be enough for the airlines to make money. And so I think it's interesting, but I think it's an anomaly. If you look at broader issues, like you look at retail sales the other day, consumer is still strong, right? You have real wage growth, you have record low unemployment or close to it, you have disposable income rising, and so consumption, I think, is fine. And what's interesting is, are we having the manufacturing sector starting to catch up and give us another leg?
Based on your dollar call, that window to travel might be closing. We'll talk more about that in a moment. Jay Pilowski sticking with us. Coming up on the program, deep discounting, taking a bite out of the outlook for U.S. airlines. We'll catch up with Sheila Kahulu of Jefferies up next. United attempted to bounce back, firmer by 1/3 of 1% in early trading. From New York City, with futures just about unchanged on the S&P, this is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Live from New York City, good morning to you all and welcome to the program. Equity futures this Thursday morning look a little something like this. We're just about firmer by 0.04%. The NASDAQ 100 attempting to bounce back, firmer by 0.25% following the worst day since December 2022. Chipmakers got hammered. Jay Poloski around the table saying yesterday's price action was a buy for him. I want to turn to the bond market. Going into jobless claims about 2 hours away. The 2-year 446, the 10-year near lows we haven't seen since March. 418.27 is where the 10-year is. Bouncing a little bit on the yield side of things, up 2 basis points, inching higher. Jobless claims the one to watch. Just how stable, how strong is this labour market? Encouraging news on the jobless claims side of things last week. Can we repeat the act this week? Switch on the board and turn the page to foreign exchange. Jay, we've got to talk about this. Your call on the US dollar. We've had individual after individual around this table talk up the strength of the US dollar off the back of Trump policy. Higher tariffs, higher tariffs. They're saying looser fiscal policy, higher yields, higher rates, all of that is going to lead to a stronger dollar. You take completely the other side of this trade. Why?
Yeah, I do, John, because I think, look, the dollar is the most over-owned asset in the world, right? The U.S. has been the dominant place to be in terms of equity markets for the last 15 years, coming out of the bottom in 2009. So you have an over-owned asset. You have the Fed getting ready to cut rates, so the dollar is starting to soften. You have markets not quite ready to fully price in a Trump presidency, notwithstanding all the talk, right? Polling is still very tight within the margin of error. And so we're thinking about it, and we think about the Trump policy mix, which is cutting taxes, raising tariffs, firing thousands of people, and really messing up the U.S. economy. And that's not just my point of view. It's Goldman Sachs, it's Moody's, it's the Peterson Institute, 16 Nobel laureates. Basically, the list goes on and on. It's pretty clear that that policy mix is not great for the U.S. economy. And therefore, I think you have a situation where people will start to say, okay, look, I'm going to go elsewhere because the rest of the world is doing pretty well. And therefore, you have a situation where there's an opportunity emerging outside the U.S. And as we touched on at the open, right, the market is not just the U.S. doing well. All country world index is at an all-time high. ACWI ex-US is at a 2-year high. So other markets are doing well. Other opportunities exist around the world. And I think that setup where you have fiscal incontinence in a second Trump administration, as you did in the first, could lead to a weaker dollar, which could continue to fall even if the Fed has to pivot and raise rates after starting to cut rates in the fall of this year.
You got it. This is the second time I've mentioned her name this week. Tina, there is no alternative. How many times have we heard that with regards to the US? You said elsewhere. Money goes elsewhere. You mentioned the equity market. Can we talk about foreign exchange? What's the elsewhere? What am I buying? What are those trades denominated in?
Yeah, well, there you look at the developed countries. You have the euro, which is considered about 10 or 15% undervalued. You have the yen, which Japan will be raising interest rates. Fair value at the yen is considered around 100. It's right now at 156. Massive potential there. And you have places in the emerging markets where the dollar could weaken considerably. You look at Brazil, you look at Mexico, you look at some of the countries in Southeast Asia. And so arguably you have an opportunity where there are significant growth and earnings potential. People just talk about earnings in the U.S., but look, Europe is forecast to grow double-digit earnings this year, next year, and 2026. China is forecast to grow double-digit earnings this year and next year. China trades at 6-8 times earnings at this point.
For good reason.
So, well, arguably for good reason, but again, in the price. And you and I have talked about this, right?
Many times.
It's in the price. And so the opportunity, the risk-reward seems pretty appealing in some of these places versus the U.S., where it's already fully in the price, at least certainly for parts of the market.
The euro right now, 109.32. Let's get you some top stories. Under surveillance this morning, President Biden facing renewed calls to end his re-election bid. ABC News reporting that both Senate Majority Leader Chuck Schumer and House Minority Leader Hakeem Jeffries indicated to Biden that it might be better to step aside. Biden taking a break from the campaign trail after being diagnosed with COVID just yesterday. Jay, we talked about this a few times already in the last 30 minutes. Does this president get to November at the top of that ticket, or does he step aside?
Yeah, my view is that Joe Biden will be the nominee in November. I think he's a fighter. I think people like Joe Biden as a fighter. And as we've talked about, right, polls are not anywhere near as negative as kind of the perspective and the story around Joe Biden. If you look at 538 Electoral College polling, Biden actually wins 277 to 263. If you look at polling, whether swing state or nationally, it's within the margin of error, 1 or 2 points, 2 to 3 points difference. So, and I think that's what's going to keep him in the race, right? It's not just him being a fighter, but it's him looking at the polls and saying, look, guys, I'm in it, notwithstanding all this negativity. And by the way, the other thing people need to remember is President Trump is not popular, has not been popular, is not popular, has never polled or received more than 47 or 48% of the vote. If you look at the RNC, everyone's talking about the RNC, Emory is even there, right? 5 million fewer viewers at the opening night than 4 years ago. People don't, there's not a tremendous amount of enthusiasm. And so to me, this is a little bit of a tempest in a teacup. And you know, I've used that phrase before.
Sure.
And it's going to pass. And I think that you have a real opportunity where the Democrats are energized, where abortion is on the ballot, where you see signs at the RNC of mass deportation now in America. Okay? I mean, I don't think that's really going to be exciting. J.D. Vance, abortion in all, forbidden under all circumstances. I don't think that's popular in America. So to me, there's a real opportunity, and I'm betting on this, right? My view, just to finish real quick.
Okay, well, what's the bet? What does that even look like? What are you betting on? Okay,
exactly. So my bet is, as we've talked about before, a global macro blue sky environment 2023 to 2027. That envisions an extension of the Biden policy mix, which has been so successful that the U.S. economy is the envy of the developed country world post-COVID. President Trump comes in, as a convicted felon, as arguably an insurrectionist, and returns to office with a fiscal incontinence policy. I think that blue sky, at least for the United States, goes out the window. And whether we talk about the airlines,
sure.
Americans are tourists.
Again in a second.
Americans are tourists. They're going abroad. Maybe it's MAGA turns to hello world, and U.S. investors and foreign investors go to the rest of the world.
You mentioned the convention. Let's talk about Senator J.D. Vance and his address just yesterday evening. How this organization, this party, is ultimately going to commit to the working man. These comments just yesterday happen to further Trump's economic message in battleground states like Wisconsin, Michigan, and Pennsylvania. We've heard this populist language again and again. It's about the working man. It's not about big business anymore in the Republican Party. Jay, the trade that I've heard, and I think you'll find this pair trade quite funny, long Bitcoin, short Meta, is the trade ultimately going into this administration if we get there. What do you make of that? Does that make sense?
Well, it does in a way, because President Trump has promised, former President Trump has promised retribution. So that's retribution against Meta, because Zuckerberg was the last platform to let him back on. And Bitcoin, definitely. I mean, I was at a dinner with some guys last night who were in the business, and Bitcoin was the topic of the day. And so it makes sense from a weak dollar perspective for me, but I really don't see it otherwise. I think the big trade is dollar down. The big trade is what happens to bonds. Bonds have been in a tight trading range. Equities have broken out around the world. Yep. Bonds in a tight trading range the last 2 years. Which way do bonds break, right? If it's a weak dollar, bonds break higher, rates go higher. I'm not sure that's going to be a great environment for U.S. assets. Bitcoin might be fine, but let's be honest, Bitcoin is a tiny little thumbnail on the global financial asset stage.
So a lot there on foreign exchange. We talked about the airlines a few times. Let's do that again. United Airlines saying third quarter profit will fall short of estimates as U.S. carriers slash ticket prices in a bid to lure domestic travelers. United's outlook echoing an earlier warning in the last week from Delta. Alaska also offering a similar outlook. Sheila Kahulu of Jefferies has a buy rating and a $65 price target on United and joins us now for more. Sheila, it's good to see you. I've got to say, I was scratching my head last week. What's going on with these airlines at a time where it's summer and I thought demand was good and the consumer was strong?
Demand is good. TSA volumes are at all-time highs, but what we're seeing is pricing in the domestic economy is pretty weak, and the airlines are telling you that's a capacity issue. Capacity in Q2 is up 5% year on year, but prices are down low single digits. Main cabin prices for Delta are down high single digits. Lower cost carriers like Spirit Airlines are reporting 11% down year on year. So that's pretty bad given pricing for airline ticket prices are already deflationary. So it's price that's the weakness. Airlines are blaming it on overcapacity, not consumer weakness. I think it's a case of the latter rather than the former.
So, Sheila, we used to play JETS, which is the ETF for airlines, right, as a reopening play. And it really didn't work, which was kind of surprising, right? It hasn't really worked. Airlines haven't really done much for quite a period of time. Is this something that you think is going to last, or is there an opportunity here, like if you're a long-term investor, is this an opportunity to step in?
I think the perspective on airlines is they're super cyclical, and they're not doing themselves justice right now. Although Delta and United are still holding up double-digit mid-teens margins, that's pretty good for a company that trades at 5 times earnings, even below the Chinese market. And so these things trade at a 50 to 70% discount to the market. Their valuation isn't going to go lower, but investors are making the bet that earnings revisions are going to go lower. And if we continue to see these prices, they will. My focus is once Boeing gets its act together, and it will one day, then we have more planes in the market, and we're not going to see capacity trimmed into the second half and into 2025. And airlines are being super cautious. It's going to be interesting to see what United says about that, because Delta's saying capacity is going to be trimmed. We've seen Q3 schedules come in. You know, Americans cutting transatlantic flights as well. So we'll see what happens and how quickly capacity rationalizes.
You mentioned American. American has executed really, really poorly over the last 12 months. It felt like a lost summer already for them. We've heard from Delta, we've heard from United. How much worse are things going to be for American Airlines if they face this as well?
I think United's going to be the best print out of all these guys, because once we see what American and Southwest ticket prices are, I think it's going to be much more disappointing than what we're seeing. United's holding up better, especially given their premium seat count, their transatlantic exposure, the highest in the group. So that helps offset some of the weakness we're seeing in domestic markets. As also, their coastal hubs are better positioned because you're seeing a lot of the low-cost carriers in the short-haul South America, southern markets.
Look at these year-to-date moves. United, double digits, up. Delta, up by 14%. This is even with the losses of the last week or so. American Airlines is down 20% year-to-date. What on earth do they do to turn this around?
They took the wrong approach, and that's why they've sort of revised their management team. They really honed in on regional capacity, restoring regional capacity, and that should have been positive for them, but it just turns out that they were in the wrong markets where they saw more low-cost competition. So I don't know what they need to do to turn it around, but they need to follow some of the steps that United and Delta are doing, whether it's having a better loyalty program, performing in the right areas of the country as well.
Sheila, it's good to see you. I'm part of the loyalty program, so I've got thoughts. I'll share them later. Sheila Kahulu of Jefferies, thank you very much. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. President Joe Biden testing positive for COVID-19. The White House saying he's experiencing mild symptoms and is planning to carry out his full duties while self-isolating in Delaware. His diagnosis coming at a critical time on the campaign trail. Biden canceling an appearance before a key Latino advocacy group as the Democratic revolt against his candidacy candidacy picks up steam once more. The Financial Times is reporting that Warner Brothers is considering splitting its streaming and studio businesses from its legacy television networks. CEO David Zaslav is weighing options including asset sales and spinning out the Warner Brothers movie studio and Max streaming into a new company and free of the current $39 billion debt load. The FT saying representatives were not immediately available for comment. And Citadel founder Ken Griffin has reportedly paid Sotheby's nearly $45 million for an almost complete Stegosaurus skeleton, the most ever for a fossil at auction. The 150-million-year-old dinosaur, nicknamed Apex, is more than 11 feet tall and 27 feet long. Griffin has a history of trophy purchases, outbidding crypto investors back in 2021 to buy a first edition copy of the U.S. Constitution. Griffin reportedly plans to put Apex on display at a U.S. museum. That's your Bloomberg Brief. John?
Unbelievable. Yahara, thank you. Thank you very much. Up next on this program, a soft landing in sight.
I believe the current data are consistent with achieving a soft landing. While I don't believe we've reached our final destination, I do believe we are getting closer to the time when a cut in the policy rate is warranted.
That conversation up next, live from New York City. You're watching Bloomberg Surveillance.
I think this will probably go down in history as one of, if not the largest